All right, cool. Yo, what's up for everyone on the YouTube replay? I've made some adjustments to my stock portfolio. I'll go ahead and get straight into my new changes and then I'll give you a quick portfolio update. But yeah, I actually decided to pick up in my Webull portfolio some Iron Mountain shares. I basically moved it from my Roth IRA to my Webull account. So I picked up some Iron Mountain shares and some Call Main shares back in my Webull portfolio. These are just two stocks that I think are at good valuations right now to buy. So we ended up selling our shares at here at $90. But hey, I'm like, I can't pass up this price. You know what? Let me analyze Call Main. Let me tell you why this is a steal of a freaking deal, I think. So let's go check this out. No way, Plasma beat Looney. Hey, what up, Jello? Good to see everyone. So check this out right here. I want to go over Call Main first, then I'll get into a portfolio update. This is your main chicken egg play in the US, number one market share by far. But check out this market cap. The whole entire company is worth $3.9 billion. Remember that number. The whole company is worth $3.9 billion. And they have $1.25 billion of cash. So literally 30% of the company is just their cash on hand. No debt whatsoever, completely debt free. And if we go to their net income, so already 30% of the market cap is their cash. They're printing hundreds of millions of net income a quarter. Now, this wasn't some one-time adjustment either. They really made this quarter 500 mil in net income after paying 100 mil of taxes and stuff because chicken egg prices, as we know, were pretty nuts like a year ago. But it's starting to normalize. Their net income is supposed to fall the coming years, but I can't pass up this valuation. They have so much cash on hand that they're making interest on it. They have, they made $12 million of interest on their cash this quarter. So anyway, the free cash flow is well. So that's the net income looking phenomenal. A couple hundred million net income a quarter. Same with FCF, which is free cash flow. Wow, 500 million free cash flow that quarter. If we ever go back to an environment, it's like an inflation hedge almost. Commodity inflation hedge. Like if egg prices ever go nuts, if there's ever bird flus again or whatever, Call Main's your beneficiary there. And great financials, I think. It's a pure commodity almost play. So it should trade at a really low valuation. You know, this PE is a 3, but I think that's pretty interesting. So yeah, why isn't Wall Street excited about Webull? Hey, that's probably because their valuation's still a little expensive. So yeah, anyway, that's Call Main stock. I also picked up Iron Mountain back in the Webull portfolio. I think they're a pretty great REIT, especially at this current valuation. Now, one of the reasons why they dropped so aggressively is there was a short report from like Gotham. They said this is a $40 stock, but then there were some analysts that came out and just like bagged on them because they were completely wrong. And so there's a lot of volatility around the name right now. So let me give you a portfolio update, then we'll get into some of y'all stocks. What up, Hunter? What up, Looney, New York? Good to see everyone. So there's our Webull portfolio. We're only up 15% all time, so really not that great. Here are our winners. You know, we got AMD, SoFi, Hood, Dave, Reddit. Oh, I forgot to mention this. I bought 2 more Futu today. I might almost go over this stock too. I didn't mind paying its current valuation. So everyone loves Webull stock. Everyone loves Robinhood stock. I own both of those. I own Robinhood, Webull, and I own Futu. It's another brokerage. It's actually this brokerage right here, publicly traded. I don't care. They're about to do a special dividend as well. Anyway, I picked up 2 more shares of Futu. I rose my average cost basis. You know, we were buying shares, at 105, 102, but I don't care. Quantity of shares wins, and it's a great company. I don't mind buying a quality company at a fair price, and it's certainly at a fair price at their current price. But anyway, yeah, that's our Webull portfolio. Oh yeah, we definitely have some losers in here. UiPath, Zoom. We bought a little fractional Sprouts Farmers Market today as well with my leftover cash. But anyway, let me show you my Moomoo portfolio. This is our account where once we buy a stock in here, I try and never sell it. We're up 13K all time, which is pretty good. Here are all our holdings in here. Probably you've not heard of a lot of these stocks before. I got Amazon in here, Ferrari. This is Coca-Cola Consolidated, the bottling company, Amphenol, huge AI beneficiary, Comfort Systems and Powell Industries as well. These are all like AI beneficiaries. Same with Constellation Energy, like these CoreWeave data centers, like these chips have to get powered still. Like even if they're all going to need electricity. I love CEG is my favorite way to benefit from that. Number one nuclear play out there. They own 30% plus of all the nuclear reactors. huge nat gas play, number one geothermal play in the US as well. They literally supply 20% of all of California's clean energy from this one geothermal plant called the Geysers, if anyone's heard of that. Really cool. Oh yeah, we got a little dividend coming in from them too. Yeah, they got a dividend share buyback program, insane M&A on CEG. So here's our Robinhood portfolio. It's our dividend only account. So year to date, not too shabby. We're up 15%. I remember in April, it was pretty, with all the tariffs and stuff, we were down 14%. So we're doing pretty decent. Here are all the stocks that we own in here. Of course, every stock in here pays a dividend. All these are in the S&P 500 as well. Only stock we're down on right now is Carlisle. I did buy a little bit more of them, a fractional little. I don't mind buying fractional shares. That's the thing. Some people don't like the psychological fractional share, but I didn't mind doing it. Oh yeah, we also have a Roth IRA. Our Roth IRA, we did make some changes in here. If anyone I didn't public the video. Right after this stream, I'm going to public the video. I'd made a whole 10-minute analysis solely on Cavco stock, one of my new favorite stocks out there. So I bought 3 shares in them. And yeah, so anyway, that's the portfolio update. Let's see what y'all have to say in the chat here. Ondas is my drone play. Hey, what's that stock? Give me the ticker symbol for that one, Hunter, if you want me to check him out. New York said Credo, amazing earnings. Yo, CRDO, this is a really cool stock. This one might, or let's see, wow, up 13%. That's an all-time high. So if you've ever bought this stock in the past, you're for sure up on your money. So yeah, they're certainly expensive, but there's so much future growth expected. Let's see what they reported. So yeah, the orange line's what the analysts expected. Huge beat on revenue, massive beat on EPS, which is net income, and EBITDA, like a 30% beat on EBITDA. No wonder they did so well on earnings. Wow. Look at this. So they used to we lose money every quarter. Now they're making a record 82 million net income. Look at that balance sheet. That's insane. Free cash flow generation. Is this the quarter of the company that's headquartered again? So do beware. I was looking at this stock earlier, and it's not really, doesn't matter, but they're headquartered in the Cayman Islands, and they don't pay taxes. I think their tax rate was like 1% from like but they don't pay taxes. That's why their margins are so high versus all their competitors. But that's also like a competitive advantage. But monstrous growth, like that doesn't matter. Like the reason the stock's doing so well is these phenomenal financials. This growth, it's always the financials that justify the stock being at all-time highs or like at all-time lows. Like if you look at Lucid stock, they're at an all-time low because the numbers are so unfortunately bad. Yeah, hey, what up, Mendo? I miss out on AppLovin too. I might try and buy them in the future there. Okay. Okay, let's see here. Ooh, thoughts on Adobe. Let's check out Adobe. Then we'll get to Ondas Holdings. We'll check all these stocks out. So yeah, Adobe, what's their valuation now? Wow. An 18 forward PE. The current PE is a 20. I know they do massive share buybacks. Let's see if there's any news. Adobe reports surge in AI-driven shopping and holiday online sales. AI projected to drive. Okay. Should we trust Adobe's numbers? Okay, I'm just kidding. But let's check this out right here. This is why I'd put Adobe on the watch list, but I wouldn't have them as like a crazy meaningful size position because they're being hurt right now by the AI replacement thesis. Like I know people make great logos in Gemini, ChatGPT. Maybe in 10 years from now, we won't need Photoshop or After Effects as much as we do now. And that isn't affecting their current numbers. Their current fundamentals are amazing, but they're pricing that in and lowering the multiple. But here's what Adobe's doing to counteract that. Because the stock price is so low, they're doing massive share buybacks. Check this out. So they're making a net income, 1.7 billion of after-tax net income, after they paid 30 mil of taxes. And what do they do with all that money? Check out this number at the top here. They're spending like $2 billion to $3 billion a quarter solely buying back their own shares. And here's what that does for you as a shareholder. If we go to the net income, it's up by 5.2. But the net income per share, the EPS, is up by 11.1. They bought back 6% of the entire company. That makes the EPS go higher, makes the PE ratio go lower, gives you more ownership in the company. In short, it just makes the stock go up. So I like that they're doing buybacks right now, but I almost wish that they would do some acquisition if they were even allowed to. I know they tried to acquire Figma, but the UK or EU regulators didn't allow it, and Adobe had to pay Figma $1 billion, which sucked. And then Figma went public now. Is Figma at all-time lows as well right now? I know they kind of follow each other. Let's see, Figma. Yeah, so this one's also kind of struggling. What's their forward multiple? Okay, so they're not projected to make any money anytime in the next year. But there you go. Honestly, I think here's the thing. I think humans are always going to need that final touch on art. I like Adobe. I nibble on it, but I really wouldn't have it as a meaningful size position just because there is a bit of risk there. What's that? Oh, yeah. Hey, by the way, this is a brokerage where you buy stocks on. Yeah, if you want to get it, it's in the link tree in my bio. Very first link there. It's an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. But yeah, it's a free brokerage, costs nothing, no commissions. My favorite one, especially for analysis. Let's see here. Oh yeah, Ondas Holdings. This is your like LiDAR kit play or something. Let's see here. $3 billion company. They've had a lot of momentum. Or Ondas Autonomous Systems. Or wait, look. What did someone in the chat say? Oh, it's a drone play. Someone said, okay, never mind. So this is a drone play. Maybe we can check out their website really quickly. Ondas.com. They have it linked here. I want to see pictures. There we go. So there's I guess a drone. That's kind of cool. Let's see if they have revenue. Let's go check it out. I haven't looked at this stock in a minute. So revenue is 10 million this quarter. That's a great growth rate. Or it was 1.48 million. Now it's 10 million. Let's hope they continue that growth. They are still losing like 10 million net income a quarter, but look at that balance sheet. They just fortified their balance sheet. I'm guessing through diluting you. Let's see. So yeah, they just diluted you by $400 million. So that was actually 11% of the company. So they diluted every shareholder by 11%, but it really fortified their balance sheet where there's literally no bankruptcy risk anymore. I mean, if they're losing 10 mil a quarter, they have so many years of cash. Let's see. Yeah. Look at that cash. It went from 60 million to 450 million. Again, all from diluting you, but very interesting to see. And that can just fuel future growth there. So I guess analysts they had a big beat this quarter, a 30% beat. But again, we're playing with small numbers here. I wouldn't own this one as like a huge size position just because they're so small, and not profitable. But actually, let's see. Yeah. How much they had like 500 mil of cash. So actually, 11 or actually like 20 or just under 20% of the company is just their cash on hand, which is kind of cool. But they'll probably put it in like some 1 to 3 week treasury bills, earn some interest on them. All right. Do you like Vici? Hey, Jamie. Actually, I like Vici, but I'm scared. Like their Vegas properties, I've heard like Vegas right now is really slowing down. Like if you look at Vici's top tenants, it's like MGM Resorts, Caesars, Wynn. If you look at all those stocks individually, where's Caesar's stocks? CZR, Caesar's Entertainment, like all those stocks I wouldn't buy individually. Like I wouldn't own the Wynn stock. I wouldn't own Caesar. Some of the customer, the Luxor, for example, is one of their customers. They own the Las Vegas Sphere, but they have a great yield. It's a REIT. You get a 6.2% dividend yield, and it is sustainable, super sustainable, as long as their tenants keep on paying. And they should just continue to pay. And all their main properties are on Vegas right here. Yeah, so look at this. It's gaming facilities is what we'll call them there. So yeah, Caesar's Palace. They own the land under these. The Bellagio, MGM. Man, I was just in Vegas. So they own the land under all of these, like the Luxor. I wish I could find all the pictures here. I've actually made multiple YouTube videos about this stock way in the past. Let's see if I could find it. Maybe I've made a post about it. It had to have been years ago. No way, dude. Here it is. Yeah, this 2024. So yeah, we were making. I like Vici. By the way, best way to support me is just subscribe to my YouTube channel. I make videos on there. It's called Nathan Roberts, also in the link tree in my bio. But yeah, just type into YouTube Nathan Robert. I'm also streaming on there. Hey, Northern Jays, what up, dude? No way. Thanks for all those gifts there. I do appreciate that. Ooh, SoFi. Hey, let's go over SoFi. We haven't looked at them yet. How's it going? Ooh, remind me to look at SE. I think that's like some Amazon play. We do own SoFi. That's one of the stocks I regret every share I've ever sold of. Wow, SoFi's having a great day. I thought today was kind of slow. Let me go check out the S&P, but SoFi's up 5% on the day. Wow. Let me go check the QQQs real quick. Oh, we are having a recovery. No way, dude. When I started the stream, we were like at rock bottom. So it's good to see. Let me see how we're doing real quick on the day here. Okay, let's go. Let's get back to SoFi here. So this is one of my favorite growth names. They deserve all this stock price appreciation. If I was a shareholder, well, and I am, but I would not be trimming and sell. I certainly wouldn't sell out of SoFi. This is a stock you just behold for the long run. But here's the thing: its current valuation is still tough. 40. They're trading at 50 times next year's net income. This is the kind of stock that certainly deserves a high multiple. the risk reward on this multiple, though, doesn't look great yet. But I'd nibble on them, but wouldn't have it as a huge size position. But here's why they deserve a high multiple. Check out their financial services. No analyst expected this sort of growth. And this is what justifies it. The revenue's up 80% after it grew 100, after it grew 140, after it grew 260. Like, I can't describe how impressive that growth is. Literally in 2020, this business was nothing. 2 mil of revenue that quarter, 3 mil, 4 mil. And ever since then, it's 420 million of revenue just this quarter. At this growth rate, that's going to be 2 billion annualized. They're beating on every analyst expectation. That's that orange line there. Every quarter they beat on revenue, beat on EPS, beat on EBITDA. That's why I really think people are taking SoFi serious. They're printing net income, like 100 mil of net income a quarter, super good growth. So that's what's so impressive about them. But the risk reward at right now's valuation isn't great. And dude, like Robinhood, and these are some of my biggest regrets selling out of these stocks. Like Robinhood, I sold most of my position, 50 shares for a 3-4x gain, and now I'm up 9x, and SoFi as well. So actually today I did just buy 2 shares of Futu, another new position. Well, I got Iron Mountain and Calmain. Calmain's a really cool name, I think. Okay, let's get back. Let me check the Roth IRA real quick. Roth IRA. Okay, cool. Yeah, here's our Roth IRA as well. I'm trying to max this out before the end of the year. It's so OP that you're only allowed to deposit $7,000 a year. That's why you should look or 401k Roth or get a Roth IRA if you can. Let's see here. Roth IRA is just a tax-free retirement account. I use Webull also. Yeah, Webull's really cool. I also own Webull stock. So let's see here. What do you think about Pinterest? Hey, what up, Marcus? So I like them for their cash, but I don't know if I love the business yet. So Pinterest IPO'd in 2019, and it's the same price that it is today. But okay, so here's the thing. It's right now valuation. It says they trade at 9 times net income. Okay. So the PE ratio is basically price to net income plus any share buybacks, but it says they trade at 9.5 times PE. But look at the forward PE. It says 39. So they're actually trading at 40. That's actually a really expensive multiple. So I'm guessing they had a one-time adjustment. So if we go to their net income, it says they made $1.85 billion. You see in the middle there, it says they made $1.85 billion. But if we go to the operating profit, we can see that was a one-time adjustment. They actually only made $260 million, and that's the before tax number, so they probably netted around 250 or something. But that forced the EPS. So basically, they're trading at 40 times next year's numbers. But here's what's so cool about them: we can see this is cool. Monthly active users are 600 million, when the same time last year was 537 million. So they're growing their monthly active users. But here's the coolest part is their monster balance sheet. If we go to their cash, they have no debt whatsoever, no debt at all, no debt on the books. And they have $2.7 billion of cash. And that cash just isn't sitting there doing nothing. That cash is earning them interest as well. They made 28 million of interest on that cash just this quarter. And that just adds money to your bottom line, which is pretty cool. But anyway, I don't love that the forward PE is a 40. I mean, I'd almost rather buy Reddit, and I think Reddit might be cheaper on a forward PE. And and Reddit's done amazing. Reddit, I could talk all day about. Like, people think this is a meme stock, but they have some of the most impressive financials I've really ever seen. Probably wouldn't touch Pinterest or Reddit at their current price, but put them on the. I love that cash on hand. What's this up? Yeah. Hey, by the way, yeah. Hey, thanks, MC. Yeah, this is actually a brokerage right here where you buy stocks on. They ask for a bunch of information, send you a tax form. They all are, but yeah, if you want to get this app, it's in the link tree in my bio. Very first link there. Broker called Moomoo. It's an affiliate link too. Full disclosure. So let's check this out right here. Oh, Adobe did an acquisition of SEMrush. I did not know that. What happened to Intel? Hey, what did happen to Intel? Did they fall today? Intel. Or hey, oh wow, they're up 7%. Wow, look at that. I wonder what happened here. Let's go see. Intel announces $208 million investment to expand assembly and testing operations in Malaysia. Intel positioned as U.S. foundry alternative as Apple and Google consider A18. Oh, so basically Google and Apple have promised to spend $300 billion and hundreds of billions into U.S. infrastructure. Well, one of the ways they could do that is taking a stake into Intel or buying their stuff is kind of what the deal was. And also NVIDIA took a stake into Intel, and NVIDIA kind of got forced into doing this, but they're moving some of their older series like crappy CPUs and GPUs over to the Intel facility. But I love Taiwan Semiconductor. Taiwan Semi is great too. They actually just created their first ever Blackwell chip in the US, because what sucked about Taiwan Semi is, they're 6 feet away from China, but they just completed in their Phoenix fab the first ever Blackwell chip. But that was actually like a month ago. Okay, mRNA. Let's check this one out. mRNA. mRNA. So check this out right here. This is Moderna. This is one of the COVID plays, and they sold a bunch of vaccines and made a bunch of vaccine revenue at this time. But now that that's over, they don't make any money, unfortunately. Yeah. So check this out. This is why I wouldn't touch this stock. Like, oh, look at these year-over-year declines. Just the past 4 quarters. Negative 45% year-over-year, negative 41, negative 35, negative 65. So that's not great. That's starting when you look at the financials, it starts to explain why a stock is either doing really good or really bad. And that's why we look at financials or at least quickly glance at them. And, so revenue's down like crazy and they're burning through a lot of money. They're losing almost $1 billion a quarter. I mean, that's really unfortunate. At least they have a somewhat decent balance sheet, but notice how their assets are just slowly going down because they lose net income. I don't know. Nothing's really blowing me away here. Declining revenue, no net income. If anything, I'd rather buy a Pfizer. And I did just buy Pfizer, but I might sell out of them. I really shouldn't own this one for my age, but 7% dividend yield. Pfizer's the same price that it was in 1997. It's just to maximize your income, and dividend should be safe, but I don't know. I might sell out of them. I like the Metsera acquisition they did, but okay. Um, Will said Rocket Lab. Okay, Rocket Lab, they lose a lot of money, but this is my favorite space play if I had to pick one. They just acquired like Geost and some other cool companies, but they're they're losing a lot of money right now, and they're expected to continue to lose a lot of money. But as long as they keep up the growth rate that they have been had, that's great news. They're getting a bunch of deals from like JAXA and NASA. Let me see this right here. Oh yeah, Rocket Lab secures first dedicated launch contracts from JAXA. That's the Japanese NASA, basically. But let's go look at their numbers right here. So their space systems business, which is 75% of the revenue, has incredible growth. This is what I love to see. It's up 36% after it grew 81%, after it grew 15. So they're on a streak of growth. I love that. And if we go over to their launch services business, that's also seen some nice growth. For the first, 95% year over year growth. So that's good. 61% of the revenue comes from US there, and then Japan, which should hopefully be a bigger portion later, 7%. Yeah, so they are still losing around 50 mil of net income a quarter. They did just complete the Geost acquisitions, where that's why they had to dilute you this quarter. Anyway, yeah, they're losing like 60 mil a quarter. I like them, but I wouldn't have it as a big size position. But certainly one of my favorite space stocks out there. Okay, yeah, I forgot to get to that one. Astera Labs. People have been saying that one. Wow, so they're down 8% on the day. Let's see if we can figure out if something like specific happened here. I don't know. Maybe it's the AWS news, AWS, or I have no clue. I'm just reading the intelligent Moomoo comments here, but let's go. I've always liked Astera Labs because they have great numbers and they always beat on their expectations. So if I was a shareholder, I really wouldn't be scared. I would just wait till the next earnings report. But check this out. The orange line's what the analysts expect. Every quarter they beat on revenue. They beat by over double on net income, and a crazy beat on EBITDA. So they're just triple beating every quarter. Massive growth. Sales are up have doubled from the previous year after they tripled from the same time last year. And they're printing net income now, 90 mil, 50 mil. And at this growth rate, what's it going to be the same time next year? And the story gets even better because this company has a monster balance sheet, over $1 billion of cash. The cash is earning interest of 11 million this quarter. They're making 10 mil of interest on their cash a quarter. So I really like Astera Labs. Just from their numbers are fantastic, and that's why I wouldn't be too scared. But let's check out the forward PE. It could be expensive. So yeah, the forward PE is 100. So they certainly deserve a high multiple, but it might still be expensive. I put them on the watch list. I really like that name. Hey, Simraz, thanks so much. He says your analysis is truly impressive. Hey, thank you so much, dude. I appreciate that. Hey, if y'all want to hit the follow button, we stream every day. Oh, I sell nothing. I've literally sell nothing. No course book, WhatsApp, Telegram. Watch out for people impersonating me. I'll never follow you, DM you, nothing like that. Yeah, hey, sorry. If you want to get this app, it's in the link tree in my bio. Very first link there. Broker called Moomoo. Okay, let's see here. Weeble stock. Weeble, I just bought them in my Robinhood portfolio, by the way, or all these brokerages are all in the link tree in my bio. But here's Webull right here. I bought this company's still expensive, so you don't want to have this as a major size position. Like I'm so bullish on Webull, but as much as I am, I only have like $400 in the stock. And Webull is actually this brokerage right here, this app. Webull publicly traded, and I've been using their platform for many, many years. Right around the time when they IPO'd 5 months ago, they added in crypto and they added in the prediction market stuff and they added in this monthly like Webull premium thing. Let's check this out right here. They've copied Robinhood's model. If you pay them like, what was it, like $4 a month or something? Yeah, so they have like their own little, so I don't pay for it, but you get like a APY on your cash, an IRA match, save on rates or whatever, some cool benefits. Anyway, they're copying Robinhood's like successful model that's blown up Robinhood. The reason Robinhood's doing so good is because they added in this prediction market stuff, because whenever you go buy and sell a stock on a brokerage, they make like a fraction of a penny. But whenever you go do this like prediction stuff, they make a juice of a commission. And whenever you do crypto, buy and sell crypto, that's where they also do it. And Webull just added in all three of those features just in the past 5 months, and the subscription thing. So that's why I'm more bullish on Bull than I think the analysts are. But as much as I love him, they're still expensive. Let's check out the forward multiple according to the analysts. They're trading at 67 times next year's net income. My own calculations are more like a 48 or something, but I love the growth here. Just a growthy name in the brokerage industry. I love the brokerage industry. I also own this brokerage. I own all the brokerages. I own Hood stock. I own Hood. SoFi's not a brokerage, but I got or maybe they do brokerage services. I think you can buy stocks in there. But yeah, I got SoFi, I got Dave and Futu. I bought 2 more shares of Futu today. So anyway, those are all the moves. Good buys today. Hey, what up, Nikita? The stocks actually bought today. I actually bought Calm Maine, 5 shares of them. And I also bought Iron Mountain here in my Webull portfolio. Those were the moves that I kind of did today. But besides that, I haven't really done much. Actually yesterday I massively bought Cavco. It's my new, like one of my favorite stocks out there. About literally as soon as the stream ends. By the way, best way to support me is subscribe to my YouTube channel. The second the stream ends, which I'm going to be live for another like hour at least, but I'm going to upload that video. Okay, let's look at some more stocks here. Hey, good morning, M. What's up, man? Pfizer has a high dividend. Yeah, for sure. This is why I don't recommend Pfizer, really. I shouldn't own it for my age. I might actually sell out of Pfizer if I see a better opportunity elsewhere. Because look at this. Pfizer stock is literally the same price that it was back in 1997. So that's bad. A massive underperformance. And if we go to the dividend yield, this is kind of why you're buying the stock. If you had to pick a reason, you're buying them for the 6.8% dividend yield. They also actually, they acquired Metsera, which puts them like in the weight loss prescription industry, a huge competitor to Ozempic and Wegovy and Zepbound. I mean. But here's what we really want to look at is the dividend safe. Well, check this out. For the past 3 quarters, they've easily made over $3 billion a quarter. We can easily tell that from the operating profit. They had a little one-time adjustment that one quarter, but they're easily making $3 billion of net income a quarter. And let's go see how much the dividend costs. The dividend costs $2.45 billion. So they're retaining like $500 million after they paid the dividend, which still isn't much. I don't love this. I should not own this for my age, but I just want to see what happens with the Metsera acquisition. I get basically you buy the stock for the 7% dividend, then you just pray for maybe 1 or 2% stock price appreciation every year, and you might not get it because it's the same price that it was in 1997. So that's kind of the news there. Rocket Lab is cool, but what do you think of MDA Space? Oh, let's check out that one. MDA Space. Oh, check this out. It's a Canadian company. IRM keeps dropping. What makes you so confident? Just the numbers. There was a short report that came out about Iron Mountain. It just doesn't bother me. I don't want to make it a major size position and buy more like crazy, but yeah, I'm not scared to sell out, or I wouldn't sell out of it. So here's MDA Space. It's a $3 billion company. They're a Canadian stock, so we'll convert the currency from Canadian to USD, and let's see what they're doing. So satellite systems, robotics, and space operations. How's that doing? Check out that kind of annual growth there. Kind of flat or up 4% year over year. So satellite systems, though, that's a great, 52% after grew 46, after 54, after 100. So that's seeing some great growth. Let's see, are they profitable? So here's this quarter. They did 40% growth, and the margins did fall on that. So the net income really did fall like 19% year over year, but that top line growth was very impressive at 40%. Did they like do any acquisitions or anything? Oh, so maybe that was why maybe the net income fell. They bought a company for 300 million this quarter. So that's interesting, that actually I really like the numbers there. Is there any like nope, no weekly news there. This brokerage wouldn't even allow me to buy that stock. Is there like a Canadian OTC or something? Good Time said BOAT is a dividend play. What is this one? Sonic Shares Global Shipping ETF. Oh yeah, so it kind of owns like Zim, GSL. Or let's go see what it owns. So okay, not heard of any of these, but these are all like shipping companies that all have really high dividend yields. So this ETF just kind of owns all of the shipping companies in one. So let's see what the yield is again. A 12.8% dividend yield. That's crazy. So yeah, that's another one you probably buy to maximize your income there. Hey, I only own like 3 Iron Mountain shares right now. I do or no, 4. I got 4 Iron Mountain shares. I do want to make that a bigger position. Calmain I bought today, 5 shares of them. The valuation's too cheap to pass up. 30% of their market cap is cash and pretty cool. 777 Fishing said Netflix. Let's do Netflix because this is a great subscription model play. I love the company, but the valuation is still too pricey for me. But this is the stock that always just trades expensive because it's such a great business model. Subscription play. Literally, let's see here, 300 million premium subscribers. They make $11.69 per month per user on average. If we just go to their net income down here, they're printing money, and these are nice growth rates too. 2 to 3 billion of after-tax net income every quarter. So that's great net income, and FCF, which is free cash flow. 2 billion plus of free cash flow every quarter as well. So they don't pay a dividend, but I really like the company. It's kind of like a Spotify or like a Duolingo. Like they always just trade expensive, but good business. I would happily own Netflix. I just love it at a little bit of a lower valuation. It's one I approve. I just don't know about this current risk to reward. I know they had a little one-time adjustment to their EPS because of like a Brazilian tax charge thing. CrowdStrike. Oh, well, I want to get to Nokia too. Oh, is Spotify is kind of similar. CrowdStrike. You know who owns CrowdStrike? The genius Nancy Pelosi. Let's check this out right here. So check this out. CrowdStrike right here. This is one of my favorite cybersecurity plays. They're a $130 billion company. Check this out. And there's still one of the things is they're still seeing lawsuit payouts from their outage. They're when the stock crashed over here, their software like bricked every single Windows PC. It took down airports. It was terrible. Made every plane in the U.S. sky have to land because of it that morning. I kid you not. But anyway, there's these negative net income numbers are because of these lawsuit payouts that they're still having to pay out. But anyway, best cybersecurity name out there. But I'd love to own them, but they're so expensive. I actually like PanW as well. Palo Alto Networks, another cybersecurity name, another subscription model play. Yeah, 55% of the revenues are subscription business. But yeah, literally like 50% of the S&P 500 or more uses CrowdStrike. Yeah, waiting for the price to go lower. Hey, what up, Meek? Check Primo brand. Hey, if you have a stock, give me that ticker symbol. I don't know what that is there. BNS, what's that one? BNS? Bank of Nova Scotia. Okay, so they have massively underperformed the US banks. But wow, so actually this stock, okay, let's go look at the dividend though. Do they have a dividend? So a 4.4% dividend will convert the currency from Canadian to USD. But look at they've had massive appreciation just in the past year. Like they've almost doubled in a year. So that's impressive, but still like flat, kind of almost like where they were in 2018. But let's go look at their numbers right here. So Canadian banking, international banking, global wealth management. That's a great industry to be in. Global banking and markets. So not too shabby. The revenue's up 14%. The net income is really good. Basically 1.5 billion of net income a quarter. That's good. I mean, we can go see how much the dividend costs for fun. They're making 1.5 billion net income a quarter, and the dividend cost 1 billion of net income a quarter. So they can afford it. Not too shabby. I think the Royal Bank of Canada has done a lot better. What's that ticker? Oh, RY stock. Yeah, look at RY. Wow. RY stock is at an all-time high today. You know, that's actually very interesting. Let's check out JP Morgan real quick. JP Morgan, pretty close to all-time highs as well. So, nice. PRMB, let's check out this one out. PRMB, Primo Brands. So, a $6 billion company. Oh, I think it's that beef, chicken, pork producer. Let's see here. I don't remember though. Did it? This might have used to breaking it down. I don't remember, but revenue is growing very nicely. So sales are up 35% year over year. Where does the revenue come from? 97% of it is the US. So revenue's up 35. The profits are around 100 mil a quarter. But if we go to their net income, they've been having some like one-time adjustments. Like they lost money and the net income's been super low. But they're still like making net income every quarter. But that's probably crushing their EPS or PE ratio. Yeah. But the price to sales are a zero point 0.9. I have to do more research on this company. Oh, wait. So actually, I was completely wrong. Looks like they serve, um, let's see, Poland Spring, Pure Life. Oh, I've heard of these brands like the Mountain Valley, Arrow, oh, Deer Park. So it looks like they sell Ozarka, um, or didn't it used to be called Ozark or anyway, it looks like they own a bunch of water brands, Splash Refresher. So there you go, water play or something like that. Wonder what's happening. That's a massive gap down. I wonder what that was earnings day. Um ASTS, or yeah, that's another space play. They basically just got you're basically waiting for the next 2 quarters. Check this out. If we go to their revenue right here, basically this is the first quarter ever that they've made real money. Like every quarter before today is like $1 million of revenue. But this quarter they did 14 mil of revenue. And check out what analysts are expecting next quarter. They're expecting 39 mil, 35 mil. So literally a 3x of the revenue. So really you're holding on for the next 6 quarters here. It's because it is really expensive. 20 bill market cap, that for a company that maybe does, that's still real expensive. Do Coca-Cola versus KO. So yeah, this is the Coca-Cola bottling company. I like this one more because I think it's more growthy than the Coca-Cola company. So they literally bottle for Coca-Cola, Monster, and Dr. Pepper, and their stock is done massive. But it's completely different from the Coca-Cola everyone knows. Like if we go to Warren Buffett's portfolio, his 10% of his portfolio is in KO, this Coca-Cola, which I still really like as a stock to just buy and never sell if you like dividends. You get a basically 3% dividend. They slightly raise the dividend every year to keep up with inflation, slightly more than inflation. A 23 PE, which is price to net income. And look at this, they're making $3 billion net income every single quarter. And then they just, so here's what you're kind of hoping for. You get 3% dividends, then you're hoping for 3 to 4% stock price appreciation. So on average, you should get 7% of your money back every year on Coca-Cola, even if you probably buy it now, which still underperforms the tech-heavy S&P. So you're not buying the stock to really outperform the tech-heavy S&P 500. But check this out. This app is telling me that, what is this, a bullish continuation triangle. And the rise probability is a 95% chance. But yeah. Anyway, one of the reasons this stock just gapped up so much is they bought back, I didn't believe it, they bought back 22% of all their shares that exist at $127 a share. So less shares that exist basically forced the stock up, kind of like the AutoZone effect. What app are you using? Hey, what up, Cyclical? Or if you want to get this, it's actually a brokerage. It's in the link tree in my bio, very first link there. It's where you buy stocks on. My favorite app, it's an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, my favorite brokerage. You can just type it into Google though, broker called Moomoo. Here's Boeing. Yeah, so Boeing, let's see right here. It's up 8 or 9% today. CFO says 2026 deliveries up for 7 Cs 10 max. Okay, so $2 billion free cash flow. Wait, DOJ penalty to flip. So yeah, they've been having to pay some fines and stuff, but I don't love Boeing as an investment. I'm glad it's doing good though, but their numbers are trashed. Boeing's the same price that it was in 2017 and they don't pay a dividend either. Like they're nowhere near recovered from 2019. And it's because they just burn through money for all of it. Look at this. Here's the one reason why I can't trust it. But despite this, the US can't let this company go bankrupt. But look at this. we're going to zoom out here. Every quarter, they lost 5 billion. Every single quarter for the past 2 years, it's just negative billions of net income. They were all the way back to, 2021. I mean, and they're really leveraged, more liabilities than assets. It's just not one that I like, but it's an aerospace and defense kind of beneficiary. But they're up 8% of the day. Nice. Do you prefer Moomoo over Crochet? I've never used that, but I'm gonna assume yes because this has the best analysis tools and everything. Because this is free, costs nothing. Oh yeah, Nokia stock. What was that one? NOK. Nvidia took a big stake into this company. Nvidia invested $1 billion into this stock right here. Is there any news on this down here? Deploys Manta Ray SON technology. Nokia to delist from Paris. Maintains NYSE listing. Okay, let's go see here. So, oh yeah, actually, they had like an earnings AI breakdown. Let's go see what this says. So, network infrastructure revenue grew 11% year over year, benefiting from increased demand in AI and cloud. Optical segment achieved 90% growth, reflecting strong market adoption of advanced. Well, here's the thing: Nokia used to be a company that sells phones. Back in the year 2000. Look at this. This was a $50 stock. Technically Nokia, no joke, is the same price that it was in 1998. But they've kind of converted the business. Oh yeah, so European companies will convert the currency to USD just to get a slight bit better idea. But yeah, network infrastructure, like a mobile network, a cloud and network kind of company. So and it seems like, if you average out the 4 quarters, they are making net income every quarter. They did lose money that one quarter, but interesting. I know Nvidia. What do you trade on? Yeah, hey, again, what up, Moozy? If you want to get this app, it's in the link tree in my bio. Very first link there. It's a broker called Moomoo. My favorite one. Let's see. Here's one. NBR. What is that one? I've not heard of this one. NBR. So Neighbors Industries. So hey, let's check it out. They're a small name. They're worth $750 million, and it says they trade at 4.7 times PE. But the forward PE is a loss, so they might have had some one-time adjustments. Let's go figure out what happened here. So yeah, look at this quarter. It says they made $300 million of net income. Well, let's go look at the operating profit to see if that's true, and they didn't actually. But they really did make $75 million, which did grow 21% year over year. But yeah, so the revenue's up 11%, and the profits are up by 21%. So they did actually grow their margins a slight bit. But that, again, this EPS was nowhere near $16. It was like a lot, maybe $1.50. I don't know. But it says next year they're expected to lose net income. So the operating, we can't really look at that because I don't really know how to value this company. So International Drilling, US Drilling Rig Technologies, looks like some kind of like oil and gas project company. Maybe we can check out their website right here for fun. Drilling, Canrig. Okay. All right. I don't know about that one, but interesting. Hopefully that probably wasn't too helpful. I apologize there. Ticker symbol NYSE. Are they a stock? Oh yeah, check this out. Or no, this is like an ETF right here. What is this? It's the Nasdaq. Nasdaq is publicly traded. I think maybe that's what you mean. NDAQ. Y'all know they were publicly traded, so it kind of like looks like the S&P 500 somewhat. Market services. How's their net income? Wow. So the Nasdaq makes easily 400 million net income. These are phenomenal growth rates. Wow, of their net income, and that's real too. They pay a dividend. 1% dividend. Heyo. Not too shabby. You got a code for Moomoo? Yeah, hey, if you wanted to use my affiliate link, I don't even know if you just sign up with the link in the link tree in my bio, I think it'll I don't know. Don't worry about the affiliate link. I appreciate you though. I know there used to be some way to I don't know how to find my referral code. I've never done that. Anyway, don't worry about it. Appreciate you though. But yeah, if you sign up, okay. Maybe if you click the link tree in my bio, the first link, it'll do it, but oh well. FCNCA. What's this one here? First Citizens Bank shares. So $23 billion company. This stock has done real good. So let's go look at their numbers right here. So General Banking, Silicon Valley Bank, did they acquire them? Is that the original Silicon Valley Bank that like collapsed a long time ago? Commercial bank. Let's go check out the net income down here. So net income, they're making good money, like 500 mil, actually a little more than that, like 500 mil in net income every quarter. Let's see, do they pay a dividend? We go to the cash flow statement here. They do, and the dividend only costs 40 million a quarter, so they pay a dividend. It costs very little, and they're even buying back their own stock. Whoa! They're spending 500 mil to $1 billion a quarter on share buybacks. So the net income, look at this. The net income is down by 11, but the net income per share is only down by 0.7. They bought back 10% of the company. So because they have because they have a low dividend and a low payout ratio, they have so much room to do buybacks. They don't suffocate themselves with a high dividend. And that's why probably the stock has had such massive performance than any other bank. I mean, I'm talking insane outperformance than like JP Morgan and Goldman Sachs. Like, wow, that's really impressive. Yeah, Kyle, they bought the remains of Silicon Valley. Yeah, that's crazy. Um, Yo, no way. Shout out to Isaiah, the legend here. He just donated a donut. Appreciate you. He said, can we look at Okta? Dude, yes, sir. So I think they're still expensive. So here's the thing. If we go to the forward PE on this one, they're trading at 83 times forward PE. That sadly means that it might be fairly valued around this $80 level. But honestly, that chart looks good, like bounce, bounce, bounce. But that's, I use Okta every time. And whenever I pull up my college software, it always says Okta in the bottom right in huge letters. Check this out, though. They beat on expectations every quarter. That's the orange line. They beat on revenue. They beat on EPS every quarter. And they beat on EBITDA. So that's real interesting. Let's go look at their numbers right now. So revenue's up 12 after it grew 16, after it grew 23. So they're on a nice streak of growth, double digits, and they're making good net income now. These are great growth rates. So honestly, because they just went profitable, we almost don't want to look at the forward PE. We want to look at like a 2 or 3 year out forward PE almost. So let's check out the balance sheet. Really good balance sheet. Let's see the cash on hand. So $2.86 billion of cash. Let's see, are they doing buybacks right now? That'd be interesting to see. Nope, they're not. They haven't done any buybacks in the past year. But let's see if they're earning interest on their cash. They are. So they have so much net cash. They're making $25 million of interest on their cash a quarter. So actually, that's it. That makes more sense now. So look, if we go to the net income, it says they made $67 million in net income. Remember, the core business did it. The operating profit is the number before taxes and before interest. And the net income includes the taxes and the interest. And usually a company pays negative interest, but since they made positive interest, this is a rare case where the net income is literally higher than the operating profit, even though it's the after-tax number, and this one's the before tax. Kind of crazy. So that's real interesting there. But the 83 PE might be like still a little pricey. That stock reminds me of like a DocuSign. Like the charts look very similar here. What's the forward PE on DocuSign? Yeah, like a 52 forward PE on DocuSign as well. It's expensive. I sadly sold out of DocuSign. We doubled our money on this one, or more. I think but yeah, we were buying anyway. Okay. Hey, that one dude, the legend in here. Nice. You're talking about Okta just bought synthetics, or hey, what up, Joshua? You look at Zscaler. Let's check out Zscaler right here. If you know how to get stocks. Hey, what up, Explorer? Okay, so here's Zscaler right here, a cybersecurity name. Let's see what their earnings report was and any weekly news. Zscaler reports strong Q1 results, raising full-year guidance, and expands AI security initiatives. Zscaler completed the acquisition of Red Canary and SPLX AI, targeting $500 million in AI security annual recurring revenue. Not too shabby. So let's go look at what their earnings are. Let's see if there was an AI. No, there wasn't. But let's see, did they miss on expectations? So they beat on revenue, they beat on EPS, and they beat on EBITDA. So it was a triple beat quarter, but they're still losing money every quarter, but barely losing any. They're losing like 10 mil in net income a quarter. That's nothing. That growth is really good though. Let's look at it on an annual basis. I mean, that's what you want to see. 23 after 30 after 40 after 60, like just hits a new record every year. So phenomenal top line growth, and they're should be getting profitable soon. Yeah, they print free cash flow, but it's the stock-based comp. So the reason their net income is still negative because they have so much stock-based comp. Let's see if those acquisitions went into effect yet. So yeah, so look at this. Wow. They spent if we go to the cash from investing activities, again, if this is negative, that means they either bought an asset, bought a company, bought NVIDIA chips, whatever. They spent $1.5 billion. It must have been on the Red Canary and that other SPAC's AI acquisition. So they must have, they didn't even have to dilute. Wow. They only diluted you by, yeah, because well, anyways, Zscaler is really interesting. Hopefully there will be some synergies in that 500 million ARR. So it's really interesting. That's another good growth catalyst for them. But I don't know. The forward they're not getting profitable anytime soon, I don't think. Can you check Rumble? That's sadly, I won't because it's a joke of a company. I sold out of. I'm glad I sold a lot of my shares. I bought them as a joke. I got 10 shares of them. Left, we're up like 50%, but this is a very bad company. They basically got saved by a Tether donation. Like literally Tether, the crypto people donated. Like I've never seen this before. The stock rallied on that day. Literally just donated Rumble like $200 million of Tether, and then they sold it for cash. That's what saved them. But these net income losses are too scary. They're losing a lot of money for the market cap, and the growth is kind of gone. The revenue's negative year over year. So would not recommend Rumble besides as a meme momentum, something like that. Hey, Rotongo, dude, no way. Thanks for those gifts there. The sweaty teddy, no way, dude. Heck yeah. Did you have a stock? Let's see. Sorry if I missed any stocks, sure, I do apologize. Oh, BLUWW. Oh, hopefully I can find that one. That's a weird ticker. We found it. Check this out right here. So here's Blue Water Acquisition Corp. I don't think I'm looking at the right one here. So sadly, I wish I could give you thoughts on them. Like there's no financials for me to look at. Yeah. And there's no volume. So if this actually is what you're talking about, sadly, I can't really recommend this one, or I don't know what this is because I can't look at the financials. Is there a different ticker symbol for it? Or if you have a different ticker symbol for me, let me know there. I feel bad. Give me another stock there. Roto. My bad there. Okay. Kyle said MELI. Is that Mercado? This is like, I think the Mexico Amazon, or where does the revenue come from? Or let me verify because I might be wrong. Okay, so yeah, it is. 55% of the revenue is Brazil. Mexico's another 23%. Then there's Argentina 18. But yeah, they do commerce services, financial services, credit revenues. So maybe some fintech products as well. But I love the net income growth. I mean, this is in USD as well. They really are making 500 mil of after-tax net income a quarter. You know, they made 450 mil in net income after they paid 250 mil of taxes. Like that's real. So they're really making 500 mil in net income a quarter. So, I don't really know much more about this company though. Let's see if there's any, the weekly, sorry, my Wi-Fi, there we go. So commerce segment saw total payment volume rise 41% and gross merchandise volume grew 28%, led by Brazil and Mexico. Fintech business expanded with monthly active users increasing 29%. Cost efficiencies improved with 8% reduction in unit shipping cost. Okay, cool. So, yeah, it's actually, what's the forward PE? A 40. So that's not too expensive. You know, $100 billion company, one of Mexico's biggest names. Yo, Tommy, shout out Tommy. Hey, we bought in our Weeble portfolio, we picked up Iron Mountain and Call Main today in our Weeble portfolio. That's kind of the only moves we've done. Oh, and we bought more Futu. I forgot to mention that. We bought 2 shares more of Futu today. Oh, I should mention this. Wait, hopefully the Wi-Fi already didn't cut out yet. Yo, basically in my neighborhood right now, Xfinity is replacing, and they gave us like a neighborhood like update. Sometime this week, they're replacing all of the cables. There we go. You know, we're just gonna stream till the Wi-Fi don't work anymore. It doesn't matter. Okay. Reddit, or what would you recommend a dollar cost average into? I really love Reddit, but its current valuation is expensive. You know, But this is not a meme stock. A lot of people think Reddit is a meme company, but they're certain. I don't think they're a meme company. Check this out, because with growth like this, I, I can't just complete. I can't dismiss this stock. The sales are up 67 after they grew 67 after they grew 25. Like they're on a streak of top line growth and bottom line growth. Most profitable quarter ever, 162 million net income, and they have a monster balance sheet, no debt at all, like $2 billion of cash, and they have like in the free cash flow as well. Everything in Reddit's headed in the right direction with monster growth. Um, their daily active users are growing like crazy. They better AI translation tools for people to read articles in other languages. Um, and they're getting money from Gemini and OpenAI to like train their LLMs using Reddit data, which is really interesting. And their ARPU, their average revenue per user, is up 40% year over year. So they're making 40% more money per user than they were at the same time last year. And the debt growth rate, they're a great growth name, but they're too expensive right now, sadly. What was the forward PE on them? I bought them, at half the price that it is today. But yeah, 60 forward PE, that's actually not crazy expensive for Reddit, but 60 forward PE, that's high. But they deserve a high multiple for sure. I'd certainly put them on the watch list. So, hey, what up, Eric? Hey, remind me to get to Adobe. I want to check out Microsoft real quick. This is one of the safest, best, never sell stocks. And honestly, this is why we're not in a bubble right now. The forward PE on Microsoft is a 29. The forward PE on Meta is a 21. On Google, it's like a 29. Amazon, it's a 30. Like, we are not, if this is peak bubble, then I think we're in for valuations are fair is what I'm trying to say. But anyway, Microsoft is one of the safest names out there. And one way or another, basically every company uses Microsoft and Windows and their Office products, or their customers do or something. But they've converted from a hardware to a software business. Like they're OneDrive, PowerPoint, all that. That does over now 120 billion of annual revenue for them, and that's just one segment of their business. And that growth is so impressive. I mean, literally just hits a new record every year, every quarter. Like you think the law of large numbers, how are they going to grow from fiscal year 2024? They did 100 billion. Now it's 120 billion, and that's just that business. They're also huge in the cloud. They have their Azure cloud. It literally just took 1% market share away from Amazon, and the growth is also over 100 billion of annual revenue for them. What about their more personal computing? This is the slower growing kind of hardware sales. That's not the growth story there. But check out the net income. They made 28 billion. That's after tax net income after they paid like 7 billion to taxes. Like they print money. They have a better credit rating than the U.S. government. So according to S&P Global and Moody's, it's safer to buy Microsoft than it is to buy Treasury bills. Or Microsoft is more likely to repay their bills than the U.S. government. So they're investing a lot into AI right now. They have the right to buy half of OpenAI or 49% of it at a low valuation. But I don't know but yeah, they're 34 billion in AI. Dude, everything in Microsoft I love. Great dividend play, dividend growth play, stock buyback play, like ETF in one, software play, so subscription play. Nice yield there. What's your opinion on today's opening? Today was such a volatile day. I mean, let's go see what it is right now. What did the second I started the stream? I started the stream when the market was literally right at the bottom, but we've had a little bit of a recovery. We monstered up here, but now we've kind of given some of that up. So today's just like a sideways kind of day. We're up 0.005. Our Roth IRA is up 0.36. So yeah, how's our Moomoo portfolio? We're up 0.3 in here though. What's leading that? Oh, Powell Industries. How are they doing? They're up 2%. Amphenol's up, wow, 2% on Amphenol. This company's expensive, but it's one I bought at all-time highs. Come on, Amphenol, I want to load this. Yeah, we were buying a share not too long ago on Amphenol. Even after its monster rally. Like some of my best buys have been buying a stock at all-time high, like Powell Industries. Look, we bought the stock on this day. That was after, it didn't feel good. I bought it after all these gap ups, but I'm like, this is the kind of stock I think that will just continue to go higher. And, you always want to buy a quality company over a fair company, even if it's, doesn't always seem right. You do the right thing in the long run, first off, you just want to, now none of this is financial advice, of course, but, have the backbone of your portfolio in the S&P 500. Most investors and even hedge funds literally cannot beat the S&P 500's 10% CAGR. So have that as at least some part of your portfolio, then play around with some individual stocks or your own strategies, Okay, let's go look at some more stocks here. By the way, if you want to hit the follow button, I appreciate that. Literally sell nothing. I have no course book, WhatsApp. I'll never follow you, DM me. The only way to support me if you wanted to is just subscribe to my YouTube channel. That's the only thing I have. YouTube channel is called Nathan Roberts, also in the link tree in my bio. But I'm also streaming on there, so if you miss anything, you can like rewind it. Sometimes I talk too fast. So let's check out Lockheed Martin right here. This is an aerospace and defense play, and unfortunately, they kind of lost their growth. But I love this one for the dividends and buybacks. Actually, look at the dividend right here. You get a 2.99 or call it 3% dividend. You get a 3% yield on Lockheed Martin, and check out how diversified that their revenue streams are. Aeronautics, rotary emission systems, missile fire control, space industry. But if we go to their revenue, let me check this out right here. The revenue is up 8%. That's actually that's good because before today the growth was kind of gone. 0.1, 4, -1, negative or +1 that barely beats inflation, but 8% growth is good. The net income was 1.62. So the net, look at these kind of declines. Like I like Lockheed Martin though, but they're not my favorite aerospace and defense play, but they're one with kind of a higher yield. 3% yield, and they do monster share buybacks. Thoughts on Moomoo saying is making trillions. Hey, oh, hey, Joshua said, are you on Blossom? I am on Blossom. I don't really love this app, but if you did want to follow me on there, it's just Nathan.Robert. It kind of, here's my portfolio, but it doesn't include my Webull portfolio. I own Comfort Systems, Google. Oh my goodness. TikTok. Look at this. Here's what they make me do. I can't believe it. So, okay, we just filled out the CAPTCHA. We're back, but anywho, let's get out of there. Let's see. Yeah, actually, Isaiah, I actually just bought. I'm so bullish on Futu. I actually bought 2 shares of them today. There's my little buy order. I bought it at 169.69. I think. Let's pull it up. I just put in the funny. Yeah, I bought 2 shares at 169.69. Not too shabby there. We got 10 shares in them, and they're about to release another special dividend. So let me go over this stock. If you're wondering what is Futu, and hey, no way, Isaiah, thanks for the hot chocolate there. Let me go over this stock because I did buy like $300 in them today, and even though they've had like this rally, I don't care. I mean, this is the kind of stock that's going to continue to climb higher. If you're wondering what is Futu, well, it's actually literally this app right here that I'm on right now. It's this brokerage, publicly traded, and they have their own stock. It's this right here. Actually, Robinhood's publicly traded, ticker symbol HOOD. And I own, here, I'll show you this. I also own Webull stock down here. I own Webull, Robinhood, and Moomoo. These are all, I think, phenomenal names to own. But yeah, the PE is a 19. The forward PE is even lower. But, and again, even if you keep your assets with Moomoo, even if they were to go bankrupt, you're still FDIC insured for $250K. But look at this right here. They made $413 million of after-tax net income. That's after they paid $80 million of taxes. So they're printing net income. And look at the net margin. These brokerages make crazy margins, 50% net margin. They're printing money. And let's see what the free cash was. Yeah. They make a lot of money from interest income. Look at the growth. It's $390 million this quarter. They also have their crypto platform, which is leading to triple-digit growth here. And the brokerage commissions are up 90% year over year. So phenomenal growth on there. And what's that interest income? Well, again, it's this app I'm on right now. If you look at the middle of my screen, I have $50. They give you a 3.6% APY on it completely for free. This is a free brokerage, costs nothing, but that's why it's my favorite. And they actually, whenever you keep your cash in here, they give you 3.6% APY, but they earn like a 4.2% APY on it, and they just pocket the difference. So it's all margin, free margin for them. And they also they can still add like prediction market to the app. They haven't even done the prediction market stuff. Hey, what does LPL stand for again, Isaiah? What does that mean? Let's see here. Broadcom. Hey, what up? Health hacks. Broadcom for the long term. I love Broadcom. It's too expensive. Or let's see. Forward PE is a 68. So that is expensive. Where do you think Calm will bottom? I don't know, but I did just buy. See, that's the thing. I don't know when Calm will bottom, but I bought today because I like the numbers and what I see there. But yeah, here's Broadcom. They're trading at 69 times net income. They're a $1.8 trillion company. So for you to double your money, if you buy a share today, they have to be worth, near $4 trillion. But I would It's too expensive, but they certainly deserve a high multiple, especially for the software growth. I mean, their software growth has been massive, triple digits even. So infrastructure software is doing amazing on top of their semiconductor solutions that do incredible. You can see the free cash flow. That's what FCF stands for. The free cash flow growth is phenomenal. These 7 billion of free cash flow this quarter. They're doing 5 billion net income a quarter. They had a one-time adjustment that quarter on the left there, but uh, they print money. They're making easily 20 billion of after-tax net income a quarter. Broadcom, I think, is the one partnering kind of with for the TPUs. Yeah, they. Yeah. So look at this. Citing robust demand from Google's custom TPUs produced by Broadcom. So not too shabby. And if Meta's considering spending billions of dollars on Google's TPUs that are ordered from Broadcom. So pretty interesting there. They pay a nice dividend too. Um L LG Display. Or is that a stock you're talking about? Oh, dude, I was so confused about your talk. You meant a stock. I thought you were talking about that stood for something. Okay. Let's check out this stock right here. My bad there. Oh, hey, I want to get to Shopify. Lester, remind me to get to Shopify and Snowflake. Hey, Catherine, how's it going? And good to see you, Raphael. I got to get to some other of these. I'm missing out. I really like GE Aerospace. We'll get to HIMS too. So here's LG Display. Is that like Life's Good? I think I've seen their products before. Let me see if that's the company I think it is. They make like TVs and a bunch of other stuff too, right? Or like washing machines even. Come on, website. Hopefully it'll pull up. Yeah, so it is this company. So LG Display. They might not be a US company. So yeah, they're actually a Korean company. So they're headquartered in Korea. So yeah, we're okay. So we're gonna have to convert the currency to USD. So let's see here. Mobile and other. Unfortunately, if we just look at the stock has not done too well. You know, if we wow. Actually, if you scroll to the monthly, it's lower than it was in 2004. It was $14 in 2004. Now it's $4. So net income. So the sales are down year over year, down 4%. The net in wow. So they're like, It's where it says they made 309 mil of. I don't know. I mean, nothing's really just blowing me away here, sadly. I mean, if they just sell it, like, is it really like if they just sell a TV, that's kind of a commodity? Like, I really don't know. Maybe it's the components in TVs that order, but like, man, like, I don't know. I don't love that industry. Yeah, I don't know. Any real cheap sticks and shovels stock? I think one that's really cheap, trading at 3 times net income, 30% of their market cap is cash. They make so much interest on their cash. This is Calmain. The whole company is worth $3.95 billion. And they have, with no debt at all, completely no debt at all. And they have $1.25 billion of cash. So nearly 30% of the market cap is just their cash on hand. And look at this. They make hundreds of millions in net income a quarter. That was a real 500 mil quarter. That's after they paid 135 mil of taxes. Like, they print money. It's the company. They sell a complete commodity, chicken eggs, but the net income is supposed to fall. But they're trading at 8 times net income, and they change their dividend every quarter. Kind of a cool one, I think. We also bought Iron Mountain today, a data center REIT with the 4.2% yield. They have a rule where they keep their dividend payout ratio in the mid 60s. It's kind of like a rule. Oh yeah, I wanted to get to this one a while back. My fault there. Let's get to Snowflake, and then we'll get to Elf. And always like to see how you analyze. Hey, thanks, Raphael. I appreciate that. So Snowflake, and then we'll get to Elf here. I know Elf just like did some acquisition. Um, but here's Snowflake. This is like Palantir's biggest competitor, and and I think they even just partnered with Palantir. So Snowflake acquires Select Star to strengthen data management in Horizon Catalog. So they actually like give companies something useful to do with their data here. But what I love specifically about Snowflake is the massive growth. Check out the annual sales growth. I mean, in 2020, it was 250 million for the whole year. Now they report in fiscal year, but it's still a 12 months time. But for the fiscal year 2025, they did 3.5 billion. It just hits a new record every year. So the sales are up 32. First ever $1 billion quarter. Look at that. We're up 32. After grew 30. After grew 49. After grew 100. so not too bad. But the bad news is they lose a lot of money. Like they burn like 3 to 400 million net income a quarter. But this quarter, they lost less net income than the analysts expected. Analysts expected them to lose 97 cents, but they only lost 89 cents. So as long as they keep up that trend of losing less net income than expected and continue this amazing growth, I really think this one should just benefit in the future. But the valuation is real expensive. 88 bill market cap and no clear path to profitability. Um, yeah, hey Raphael, if you got a stock you want me to look at, let me know there. We'll check it out. So here's a beauty company. They had insane growth in like 2022 to 2024. They like 8x or something. But let's go see if there's any well, here's one thing that happened to them. If we go to their cash and investing activities, they spent $600 million buying a company this quarter. And even after they did that, the sales were only up 14% year over year. So the growth has been slowing. Like last quarter was up 9, the quarter before was only up 3.5. So that's kind of why multiples have come down on this company. You know, it was 211, now it's $70 stock. And they are net income positive every quarter, which is good, but the margins have been struggling. But it's not just Elf, you know, the whole beauty, like if you look at Ulta Beauty, Estate Lauder even. How's Estate Lauder doing? So it's not like Hims exclusive. Yeah, look at Estate Lauder stock. Wow, that's not good. What's wait, what was that? Anyway, but I wonder what synergies will happen with this acquisition that they just did. Even look at that. Actually, this quarter specifically, analysts expected them to do 365 mil. They only did 340 mil. So that was a miss. And whenever you're a high multiple, high PE company, you know, and you miss on your growth, that'll collapse the stock and gap you down on earnings day. Um, so sadly, this is my least favorite semiconductor play out there. Sadly they suffocate themselves. They suffocate them with the high dividend. So if we go to the dividend, they have a 3.2% dividend yield, but the payout ratio, it says 100%. It really is 100%, which is unfortunate. And they're not. Well, let's see the growth. What is it? So actually, the growth is back, but it's kind of compared from a whole. So yeah, look at this. If we could look at it on kind of annual basis, like the revenue's down, like they're not experiencing the growth that Nvidia and AMD and Broadcom are. So if we go to the net income though, here's what we really want to focus on. Like this is the good news. They're easily making we'll call it, we'll be generous. They're making 1.3 billion of after-tax net income a quarter. Well, here's the thing. They don't actually retain that because they pay a dividend. So they make 1.3 billion net income a quarter. Yes, but the cost of the dividend is literally 1.24 billion of net income a quarter. So that super high payout ratio scares me. They literally retain no money for themselves after paying the dividend. So I don't know, not one that I love. You kind of buy that if you want a higher yield. Oh, Novo Nordisk. Let's do this. But ooh, poor Novo Nordisk, you know. Sorry, had to fix that. We're back. Hopefully that didn't. Okay. Okay. So here's Novo Nordisk. This is the company that owns Wegovy and Ozempic, you know, that weight loss prescription. You know, Elon Musk is on Ozempic, but the multiple, and it's a Netherlands company. So let's convert the currency to USD. But the multiple has really come down versus the industry average. You know, they trade at 13 times net income. Industry average is 24. That's because sadly they lose their exclusivity for Ozempic in about 2-3 years. And they're already seeing mega competition from Zepbound. Novo Nordisk finalized its acquisition and licensing deal of Zaltenibart from Omeros. So it looks like they're doing some acquisitions because yeah, right now it's a pure like weight loss play. You know, 93% of the revenue is their diabetes and obesity care products, basically Ozempic, Wegovy, but they have been missing on expectations. Massive miss on revenue this quarter. Look, the sales grew. They were expecting higher growth than this, but they missed on revenue. The revenue grew 10%, but the profits fell by 22. And then they really did fall by 22%. So what's happening is the cost of Ozempic is being reduced. Look at this. Medicare and U.S. authorities secure 71% price cut for Novo Nordisk's GLP-1 prescription. That can't just happen and your margin not go down. So this is the sad part. It might really be like it should be at a 13 PE. Like, I almost don't want to say that, but it might literally, this might be reasonable price for Novo Nordisk. I mean, it might all be priced in, but you get a nice yield too. It's the future uncertainty that's really hurting Novo Nordisk, and there really is some future uncertainty. I don't know. Hopefully that was helpful. Someone said, I feel like I'm being annoyed. Hey, sorry, I'm trying to get to all the stocks here. I'm reading the YouTube chat first here. Someone said, okay, AGX. We'll check that one out. I got you. All right, let's check it out there, homie. AGX. So, um, uh, not really into specific stocks. Oh yeah, hey, yeah, ETFs are really the main way to go. So here's Argan. This stock has done phenomenal. Check that out. They're pretty much at an all-time high today. Let's see what they do. So power services. Yeah, this must be in such demand. Check out the growth in the middle. These year-over-year comps. That's what kind of lets this stock deserve all that stock price appreciation. That's insane. They're also in industrial service. Looks like that fell 27% year over year. But let's see. They actually missed on revenue this quarter, but massive beat on net income and on EBITDA. So they must be expanding margins. Let's check that out, actually. So the revenue only grew 4.7. So the revenue's up 4.7, but the net income grew by 93, which means the net margin. Wow, the net margin went from an 8% to a 15. So they have PP, they have pricing power, and that was real as well. Like, that wasn't some one-time adjustment. Like, the operating profit, the net income really did grow to 35 mil. So that really was real margin expansion. That must be the real winner here. Yeah, gross margins up 35, net margins up 85, massive net income beats. So what's the forward multiple? Let's see. So the forward PE is a 41, but that might be wrong because they're using these numbers and they constantly beat like by insane on EPS. So hey, I don't know. We kind of want to see them beat on their top line. Interesting name there. They might be expensive. How do you read the PE? What does PE tell you? Basically, the PE ratio is the price of net income plus any share buybacks or dilution, and it all like oil stock. It's so industry specific. Like oil stocks normally trade at like 10 times net income, and insurance stock trade at 12 times net income. But if you're tech, they get a 25, or software, you get a 30 multiple. You always blend it. There's so much to like remember. Oh yeah, thank you, Lester. I promised him I'd get to this one a long time ago, and thanks for reminding me. So let's get to this stock. Actually, you know who else owns Shopify? Kathy Wood, and I used to have a Shopify store. It's now her second largest holding. Look at that. Her largest holding is Tesla. Her second largest holding is Shopify. I regret not buying this one. I used to have a Shopify store. I paid for their most expensive subscription. And even if you pay for that, you have to give Shopify 0.25% of every sale that you do. So literally, they just collect a royalty every time there's a sale on the site. But here's why they deserve a high multiple. Check out this annual revenue growth. This is so good. I mean, just a new record every year, every single quarter. And they're beating on expectations too. If we go to that free cash flow on this company, it's really good. Yeah, look at the growth rates, 20%, 25, 50, 40. So they're making like 500 mil of free cash flow plus a quarter. And if we go to their net income, they're making also a couple $100 million of net income. Insane growth rates as well. And on top of that, cherry on top, a monster balance sheet. Let's see their cash. They have $6.4 billion of cash. Is it making them interest? Yeah, they made $80 million of interest on that cash this quarter. That's nuts. So anyway, Shopify, expensive though. Let's check out the forward multiple. It's 100. So they're trading at 100 times next year's net income. That's real expensive, but I wouldn't buy it here. But I'd love to own that. I really, 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 really would love to own Shopify, but not yet. Hey, yeah, Progressive special dividend soon, and hopefully we get the Futu special dividend too. That's why I use high figures to capture the entire Earth. 100 could be off. Back to Texas Instruments. Someone said they don't make GPUs, TPUs, they make analog chips, so it's an entirely different market. I remember Texas Instruments like buying all their calculators and stuff like that. Let's see. One fun stock that is underrated. I guess a fun stock would be Calmain. I really like this one. I don't know why. They just sell eggs. Largest market share for the commodity of chicken eggs. They literally have like a 40% market share in the US. And It's like whenever there's inflation, bird flu stuff, if the commodity of eggs go up, then you're going to make a boatload of money. And the risk reward seems fair. The whole company's worth $4 billion, and they have $1.25 billion of cash, and they print a couple hundred million in net income a quarter. But that net income is expected to fall in half. But they're trading at 8 times next year's net income, and you really subtract 25% from that for the X cash PE multiple. I bought them today. So, hey, remember, none of this is financial advice. I'm not an expert. Don't listen to me. I literally sell nothing. I have no course book, WhatsApp. I'll never follow you or DM you. Please watch out for people impersonating me. Sometimes you get followed by someone impersonating me. They'll like DM you a bunch of weird stuff. I'll never follow you or DM you. Not in a mean way, but you know what I mean. Someone said Nebius. Nebius, this is another cool name. Actually, NVIDIA owns them. If we go to the NVIDIA portfolio, they own CoreWeave, APLD, and they also own Nebius. This is a data center play and a cloud play now because they basically have these massive data centers with a bunch of NVIDIA chips, and they're using it for cloud server hosting now. And Microsoft just gave Nebius a $17 billion deal. So basically $17 billion of the Microsoft Azure cloud is going onto Nebius's servers because Microsoft didn't want to take that liability. Let's see, what does this say? Revenue growth is driven by AI infrastructure demand and a significant partnership with Meta. Yeah, Meta is doing massive deals with like Google Cloud and stuff. But what I've loved about them specifically is the growth. It's like a monster of a growth name. If we go to the sales, it's up. It was 32 million the same time last year. Now it's 150. It was a record quarter, 150 mil of revenue. But check out what analysts are expecting in 2 quarters. They're expecting 469 million. That's insane growth, mostly from that Microsoft deal. And sadly, they're still burning through a lot of money. They're losing over 100 mil a quarter, but it looks like they are expected to narrow their losses as the sales kind of 3x there. But I don't love them because they're losing money, and in the long run, they're kind of the bag holder. They're also, they're headquartered in the Netherlands, and NVIDIA does own them. Interesting. I wouldn't have it as a major size position, maybe like a small position or something, but yeah. Would you rather buy at the moment Meta or Amazon? Ooh, great question. I own both of those companies. I think they're both phenomenal, never sell stocks. Here, let me pull this up. Meta's at like a 21 forward PE. Probably, probably actually Meta. But both of them's the real answer. Both are great never sells, and I plan to never sell either of them. Here's a cool read. This is CTRE. This is a healthcare, a senior housing care company. And even though this stock is at an all-time high today, if you buy the shares right now, you still get 3.5% of your money back every year in a dividend because this is a REIT, a triple net lease REIT. They're one of the most under-leveraged REITs out there, and that's my favorite part about them. You look at like a Realty Income or a lot of these other, almost every other REIT, literally, they're in like the top 5% of REITs, like most under-leveraged balance sheets. It's phenomenal and super growthy. Now, they got this growth through share dilution, but they got a better return on it. So the sales have been massive. The revenue's up 71, after grew 38. This is insane growth. It was from an acquisition. If we go see down here, they acquired like this UK senior housing thing, but the net income growth is phenomenal. Everything about this company I like. So no wonder they're at an all-time high today. And it's not just them. I think the whole kind of senior housing industry. Look at Welltower, for example. All-time high on Welltower. Pretty impressive. All right, let's see here. What's this here? I think it might still be undervalued at 10 bill. Oh, MP Materials? This is one of the major beneficiaries if the escalations tense up with China again. So China, this is why they rallied up back here. China basically implemented this if you wanted to get any rare earth minerals from China, you'd have to fill out this extra pain in the nuts, permit form. I forget the exact words because this was a long time ago. I'm trying to remember this news from, but they made you have to fill out like an extra, they made it a nightmare. So basically China doesn't want to give us any more rare earth minerals because it helps us, strengthens us. So we're trying to be more rare earth mineral independent. So the U.S. literally bought 10% of MP Materials. And they're opening up this one rare earth mineral mine in the U.S. that's literally going to supply the U.S. for the next 50 years of some certain rare earth minerals, which is pretty cool. Let's see. Yeah, look at this right here. Material segment fell 50% due to cessation to sales to China. So there's like this whole kind of thing right now, but the future growth is good. Revenue is supposed to jump up to 100 mil next quarter, then 105 mil. So, uh, and they're still losing money every quarter, but it's kind of the 2026 growth. I wouldn't have it as a major size position, but interesting name there. Got government backed them. SMX stock, what is that one? I haven't heard of that one, I think. SMX Security Matters. Actually, we're not going to cover this company, sadly. If you look in the top right, the whole company is worth $50 million. They're at an all-time low. And look at all the reverse splits. So they are up 30% on the day, but that's after that's after all this. Because of all the reverse splits, the stock used to be like $2 million. So let's see here. So this company deserves to be at all-time lows, sadly. Again, think about this. We should get off this stock, but if you look at the market cap, they're worth $55 million. Let's say you buy the whole company for $55 million. Here's what you're buying. Look at these net income losses. Do they have revenue, though? No revenue at all, completely revenueless, and they're burning through so much net income. Yeah, they're not one I trust, sadly. Can you do a fundamental on Dogecoin? Hey, I wish I could there. What up, Gel? Unfortunately for we don't really look at crypto because there's nothing to look at there, but that's also kind of a unique feature about crypto. There's no earnings reports to worry about. Like they can't miss on their net income. They can't miss on their net margins. So that's kind of interesting, but it looks like they haven't done too well compared to, actually all crypto is kind of in a struggle right now. So PSIX, let's pull up this stock right here. The valuation is so cheap. I mean, 10 times PE. Actually, let's check out the net income down here. So this is great net income. The growth rates are really good. They're making, call it 30 mil in net income a quarter, and they've deleveraged their balance sheet like crazy since they're retaining all this net income. So the liabilities used to be 87% of the assets. Now it's only 64. So actually, I like this one, but as much as I love them, I wouldn't have it as a major size position. I have like $200 of the stock, but look at this. The growth is really good. Sales are up 62. Last quarter was 73, 42. Here, I'll show you my position, and then we are down 16% of them. Yeah, we got $270 of the stock. We're down 16%, but they're not. These numbers are good. I certainly, if I was a shareholder, I would not sell out of this stock. That would be the wrong move. They're beating on every expectation every quarter, so. I like them, but not as a major size position. Let's get to HIMS right here. I forgot to get to that one. My bad. So I don't love this one, sadly, because their net income let's just look at their forward multiple. They're trading at 68 times net income of next year's net income, and that's because their peak net income was kind of last year because they were selling their weight loss prescriptions on their website for like an insane amount. But now they've cut the price of it. They used to sell Ozempic on their website. Now they sell a different weight loss prescription and they make way, way, way less margin on it. But they have they're selling a bunch of other prescriptions as well, and they're growing their premium subscribers like crazy. Let's actually check that out real quick. So revenue increased 49% year over year, fueled by a 50% rise in online revenue and a 21% subscriber growth to 2.47 million premium subscribers. But yeah, look at this. Margin pressures from price reductions and GLP-1 treatments, basically the weight loss prescriptions. Oh, but interesting though, the company completed a $260 million acquisition to expand into the European market and launch new hormonal health products while reducing GLP-1 treatment prices by up to 20%, impacting near-term profitability. So if I love the top line revenue, but the margins won't be the same, I don't think. Like these are great. This is why I still wouldn't completely dismiss HIMS. These are great growth rates of the sales, and they're still making net income every quarter, but the net income really was only 15 mil this quarter, and analysts aren't really expecting it. That was a miss on net income, and expected to be lower next quarter. I don't know. And they just, the debt issuance wasn't a big deal because they were doing an acquisition. But yeah, look at that. Wow. Actually, I want to see the synergies of this come through. They spent basically $1 billion buying a new asset. And that's actually that's a stock moving acquisition because the whole market cap is $8 billion in a $1 billion acquisition. It's like 1/8 of the company. What websites to use for this? Yeah, hey, these are all actually brokerages where you buy stocks. And if you want to get or use any of these brokerages, they're all in the link tree in my bio. They all send you a tax form. They're all where you buy stocks on. So if you want to get it, they're all in the link tree in my bio. The one I'm on right now is my favorite one. It's in the very first link there. broker called Moomoo. But let's see here. Charlie said ASRT. What's this one? Asterio. So another really small name, $75 million market cap. That's so little. So actually, I don't know if we'll really cover this name there. They're worth 75 million. And actually, no, it says they made 11 million net income this quarter. Was that real? It looks like it was because the sales jumped up 69%. It really says they made 10 million net income on that. The previous quarters, though, they lost money. As long as they keep up this net income right here, that'd be great news. Because even the analysts didn't expect that. Yeah, I don't know if this was some sort of like they sold an asset or something, but if this is real and they continue this sort of growth, that's really good. If they're making 10 million net income a quarter and the whole company's worth 75 million, but there's something I don't know here. Like I have no clue. I wish I could give you more thoughts on this one here. Licensing and mergers and acquisitions. So, I don't think they own their own products. They like own. I don't know. I don't know though. I wish I'd give you more thoughts on them. But certainly interesting because if that growth this quarter was a nice little jump up there. Hey, 050 was saying BE Bloom Energy. I don't know about this one. Let's check it out. The stock has been on a monster performance. Look at that. It was like $12. Now it's $100. Is there any? What I just clicked there. Weekly brief. Bloom Energy Technology gains traction in U.S. data center market. Calper invests $30 million in Bloom Energy. So the company secured orders from Equinix and Oracle. So Bloom Energy solid oxide fuel cells being adopted, U.S. data centers, projected demand reaching 12% of national power by 2028. So they got deals from Oracle and Equinix, which is a huge data center company. Let's see, revenue is, let's check out the future expectations. Supposed to be 640 mil. That's going to be a huge increase. They're supposed to make net income next quarter. Yeah, the EBITDA is supposed to go positive. So I think the future expectations are just bright here and they're pricing that in. What's the forward multiple? It is a 300. So certainly expensive, but maybe you do like a 2 or 3 year out multiple. Or just now getting profitable again, which is good. So yeah, anyway, interesting there. Do you own any ETFs? No, but I love ETFs. Can you look at LUNR? This one I don't like. I'd rather buy Rocket Lab. Let's see here. Revenue is down 10% year over year, and they lose money every quarter. Well, this is interesting though. If this is real, check this out. This is maybe why you just hold the stock there. They're expecting 177 million of revenue in 2 quarters. Any weekly news? No. What's the short interest on this company? Actually, at one point, I bought puts on this company and I made good. Yeah, 25% of all the shares are being shorted. I remember this one a long time ago. This is when I shorted it and it worked out perfect. They launched a rocket to the moon. Then when it got on the moon, apparently it tipped over, collected no data, and was just a big waste of money. And then the stock tanked to $3. So, but it looks like they got some more contracts. I know they have a bunch of contracts, but I don't know about this one. Backlog increased to 235 mil with the combination entity backlog reaching 920. After the Lantris acquisition. So they acquired a company called Lantris or something. That's actually the right thing for them to do. Buy another company because their original business was like a scam. What platforms is it? Hey, by the way, this is a software we buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. It's an affiliate link, full disclosure. So if you can deposit $100, we'll both get some free stocks. But yeah, my favorite brokerage costs nothing. And a lot of people just like to keep their idle cash in here because it earns the 3.6% APY for free. So do you think Roblox will ever recover? What up, Neil? You know who also owns Roblox is Kathy Wood. If we go to, she actually lost a lot of respect because of her portfolio tanking. But let's pull up Roblox right here. Healthcare plays. Yo, I love HCA Healthcare and Cormedics right now. We'll check them out after this. Here's Roblox, though. There's one reason. There's good news and bad news, but the bad news is too bad for me to buy the stock because there's some really, really good news, and I'll share with you that here. If we go to this is a very important metric. This is their daily active users, a hard number to grow. Their daily active users, literally quarter over quarter, went from 111 to 151 million. I hope it's not propped up on some AI bots, but if that's real, the daily active users went from 89 mil to 150 mil in a year. Incredible. But here's the bad news. If we go to the net income, this is bad. They're losing 200. Their losses are worsening too. They're losing like 200 to 300 million of net income a quarter. They're really leveraged as well. Same liabilities as assets. They're having to, dilute slightly every quarter, but they print free cash flow, but it's the stock-based comp that eats them up. So yeah, in GAAP net income, they lose 200 to 300 mil a quarter, but they do have nice growth because, great top line growth, 50 or 47% after 28, after 15, but the net income losses scare me. Hey, what up, MC? Intel up. Clem, dude, you haven't seen you in a minute. Good to see you, homie. Yeah, Intel's doing great. I wonder if there's any specific news here. Intel jumped early Tuesday. Adobe has signed an NDA with Intel and received an 18A. Well, there were some other companies ordering stuff from them as well. Intel positioned as U.S. foundry alternative as Apple and Google consider 18A process, which is the I wouldn't even be talking about this stock if the government and NVIDIA didn't save them. NVIDIA has a big stake in NVIDIA. NVIDIA has a big stake in Intel, and NVIDIA is moving some of their older chip series, like the GTX 1080 stuff, to Intel. Yeah, the government owns a 10% stake in this company now too, which is interesting. So the good news is the U.S. government cannot allow Intel to go bankrupt because we need the manufacturing capabilities. We need to be more manufacturing independent here in the U.S. because for all of time, Wall Street has rewarded companies and corporations for outsourcing all your manufacturing to China. We've just kind of and we're starting to realize that. And ooh, Isaiah, what up? He said Grab. Yo, this is a cool company. If you're wondering what is Grab, this is basically international Uber. They literally do exactly what Uber does, the exact same thing, but in all these other countries. Like notice the US and Canada aren't on here. That's what I like about them. It's like Malaysia, Indonesia, Singapore, Thailand. Like we know the commodity of ride sharing and getting stuff delivered to you works, and Grab is your international play. And what's so cool is Uber just bought a huge stake into them. This was so smart by Uber, by the way. I'm also so bullish on Uber stock, but this gives Uber instant international diversification. Uber owns the largest portion of this business. They own 13% of all the shares. Also, they're backed by Toyota Motor. They own 5.5%. So they basically get into the Uber network. They benefit Uber's the largest shareholder. They're the most incentivized to make them do good. But anyway, they make net income every quarter now, which is great news. It's an interesting name here that might. What's the forward PE? Just because they just got net income positive. Yeah, 65 forward PE, but it's a fascinating company. Okay. Keep me on this side. Hey, what up, Mal? Good to see you. Yo, if y'all want to hit the follow button, we stream every single day around the same time every day. By the way, I sell nothing. I have no course book, WhatsApp, nothing like that. I literally sell nothing. Watch out for people impersonating me. I'll never follow you, DM you. Only thing I do have, though, is a YouTube channel. So best way to support me if you wanted to, just subscribe to my YouTube channel. I'm trying to build up my viewers on there. Watch a stream from there. It's called Nathan Roberts, also in the link tree in my bio. Sammy said Chevron. Thoughts on Chevron? You know who owns Chevron? Would be the homie Warren Buffett. If we go to the Buffett portfolio right here, 6.5% of his portfolio is in Chevron. Massive dividend play. Look at this. You get a 4.5% dividend yield with Chevron. Now you're buying Chevron for the diversification into oil and for that dividend. This will not outperform, the tech-heavy S&P 500 in the long run. But what you do get is, Chevron, these oil stocks do good whenever there's war fears, inflation fears, currency fears, all that. Oil does good in those environments, and you get a nice yield in the meantime while you just hold it in a diversified portfolio. So I always think it's worth having oil as a little chunkier portfolio. My oil play right now is MUSA. Now, I chose this one specifically because they don't have a high dividend payout ratio like most oil and gas stocks do. They actually have a super low payout ratio, but or super low dividend, and low payout ratio, but they give all the excess money to share buybacks. Kind of cool. Okay. Steven said MDB. Yo, they reported earnings today. I did not look at them. So I think they're up 24% on the day. That might be an all-time high. No, not an all-time high, but still really great day for them. Let's see what MDB has now delivered back-to-back upside quarters after big beat. Well, let's go look at this. And they rose their guidance. Um, appoints new CEO. Really? So wait. The company added 2,600 customers. Interesting. Well, anyway, let's go look at what they reported. So the orange line is what the analyst expected them to report, and no wonder they gapped up on earnings. That was a massive beat on revenue, a massive EPS beat. Whoa! They expected them to lose 80 cents. They only lost 2 cents. I remember this company used to lose some money, but it looks like they lost way less money than analysts expected, and the EBITDA as well. So no wonder they gapped up. It's probably because they're getting real close to profitability. And look at this balance sheet. That's really good. It's a really good balance sheet. And yeah, they're actively paying off debt, or this must be share retirement. Well, actually, let's go see again. If you're on the cash from financing statement, if this is negative, that means that they're either paying off debt or buying back your own stock. So let's go see. Yeah, so they bought back $150 million of the stock this quarter. So not too shabby. Okay. IGC stock. What's this one? IGC. So IGC Pharma. So actually, this one's a bit risky. Actually, we'll probably not cover this one. What's the software you're using? It's in the link tree in my bio, the very first link there. It's actually a brokerage called Moomoo. My favorite brokerage. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. My favorite brokerage to buy stocks on. But yeah, IGC Pharma, they're a $28 million company. That's an extremely small market cap. So that it's just hard to trust these kind of names. So let's think about this logically. The whole company's worth $28 million. Let's see what the business is doing. You're buying a business that did 190K of sales, and it's down 50% from the previous year. So basically, I'm sure someone in here is making more money than this company, and they're losing $1 to $2 million in net income a quarter. So, when at first glance, like it's only $2 million they're losing, but when the whole company is worth, $28 million, $2 million is 4% of the whole company. So there might be real bankruptcy risk there. The sales are super negative, and it's a super, super risky one. But those kind of stocks, though, maybe are fun kind of swing trades, I'm not good at that stuff. Is a 2-generation behind current manufacturing standards. 18A nanometer. Hey, what up, Looney? Hey, AJ, love your thoughts on these. Hey, thanks, AJ. I appreciate that. You think Duolingo will outperform Spotify? Actually, I think it will. Like, I don't know why, but I just think it will. Let's actually go over Duolingo really quickly. This is one of the stocks being hurt by the AI thesis, but they're still expensive. That's the thing. Like it's probably like fair at this price because the forward PE is a 40. Like all these kind of stocks, like Spotify, Netflix, they all trade at like a 40 or something. Well, actually, it's more than that. But Duolingo 40 forward PE. Why are we looking at the forward PE? Because the current PE is a 23, and that's adjusted because if we go to the net income, it says they made $290 million. They didn't actually. They only made $35 million, but it was a record quarter. So let me show you why I love Duolingo, and I'd absolutely put them on the watch list, but I'd nibble on them here. I wouldn't full-size position it yet. Like if I wanted them as 5% of my portfolio, I wouldn't do that, but I'd maybe make it 1% like today or something because the numbers are so good and they're not being hurt yet. This is their subscription revenue. It's that language learning app. If you want to learn a language or something, you pay for their subscription and check out the growth of their subscription business. It's up 45%. After grew 48, after grew 45. Like the growth rates in the middle here, you can't make this up. It's 50% every quarter. And if you don't pay for their subscription, you see a bunch of ads and their advertising revenues up 45%. So everything here is headed in the right direction. Record profitability this quarter, record sales, deleverage your balance sheet like crazy. There's nothing I can complain about around Duolingo except the slight high valuation, but they certainly deserve a high valuation because of that consistent subscription revenue growth. And hey, thanks again, Isaiah, for all those gifts there. Heck yeah, dude, I really appreciate that. Let's check out CoreWeave right here. This is one you swing trade, maybe for like 2 or 3 years. I don't know yet if I would hold this one permanently in the long run because they might be the bag holders buying the super overvalued NVIDIA chips right now. And NVIDIA is saving this company. NVIDIA has like a huge, like one of the largest shareholders. Actually, if we go, here's the NVIDIA portfolio. That's 77% of their portfolio. Here's kind of the circular thing right now. NVIDIA is giving CoreWeave, Nebius, and them money solely, like taking stakes in them and giving them money solely for them to just go buy NVIDIA chips with all that money. And but they have a crazy backlog. Here's the thing, like CoreWeave, they're all these GPUs and data centers uh are being used by like Microsoft. Part of the Microsoft cloud is going onto CoreWeave and stuff. Let's actually see this. They have a huge backlog. And look at this. The revenue was fueled by large contracts, including a $14 billion deal with Meta and a $6.5 billion expansion deal with OpenAI. So some of OpenAI cloud servers are going onto CoreWeave. Same with Meta. Their contracted backlog doubled to quarter over quarter to $55 billion of backlog of orders that they haven't fulfilled yet. But one thing, bad news, CoreWeave actually lowered their guidance. They said that they couldn't get people to they lowered their guidance by like 200 million because of this, because they couldn't get people to like complete the data centers in time. But those, I really liked. There's good and bad news there. I forgot to show the revenue there, but the revenue growth is crazy good. What app is that? Yeah, hey, again, if you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, that very first link there. So let's see here. AYI, what's this one here? City. That's interesting. Hey, this brokerage is telling me, what is this right here? There's a little bullish flag at 93% rise probability, but they're at an all-time high. So congrats if you own this company, and they pay a dividend. So let's go see what they do. Brands Lighting. Looks like the sales have been flat for 3 years over there. What about their other business? Intelligent Spaces. Whoa, look at that though. That just had a massive little, in the past 3 quarters, triple-digit growth here. Did they do like an acquisition? Let's go find out. So they did actually. Well, that explains it. Well, they bought a company for $1 billion. Not sure what, but that led to inorganic growth, but still growth nonetheless. Because yeah, before that, it looks like the business was kind of struggling. But what's weird is the stock has done so good, and I don't know why. I mean, they're making good net income every quarter. Easily, we'll say 100 mil in net income a quarter. So let's go see how much the dividend costs. I think the dividend will cost like 3 mil or something, or maybe 5 mil. Let's go see. Like the payout ratio is so low. So they pay a dividend, and the dividend cost, yep. Oh my goodness. Okay. Sorry. Dang, these winter allergies just get to me. But look at this. Their dividend at the top only cost 5 mil a quarter. So there's so much room for future dividend raises. Since they don't suffocate them with the high payout ratio, they can do like $1 billion acquisition again. Anyway, I wish I could give you more thoughts on them, but it seems pretty interesting. Hey, what up, Sean? Good to see you, homie. He said Taiwan Semi. Someone said I unsubscribed from Duolingo. You know, someone on my other stream said that too. They're like, there's a lot of competition. Like you could learn the language for free, maybe on like a OpenAI, or I don't know. I know OpenAI is working on their own language learning app competitor. They had their whole like the day the OpenAI did like a PowerPoint presentation at some investor conference about their language learning app. Like Duolingo fell 14% that day, but that was like over a year ago. So here's Taiwan Semiconductor right here. Here, I love this stock right here. So $1.5 trillion company. They're like NVIDIA with the higher yield. If you didn't know, NVIDIA just designs the chips. The person who actually manufactures them, makes them, is actually Taiwan Semiconductor. And they actually just completed their first ever Blackwell chip production in their Phoenix fab. Because normally, with big risk around this and why Intel has been doing so well, most of these, all the basically good NVIDIA chips are all manufactured in Taiwan, 6 feet away from China. And that's scary. But basically, I love this company. And that's also a bit of NVIDIA's moat, because other companies are reaching out to Taiwan saying, hey, can you please produce our chips for us? We'll give you money. And they're like, sure, but in 2029, because we have an exclusive deal with NVIDIA. So that's part of like NVIDIA's moat, that they get the exclusive manufacturing for Taiwan Semi. But Taiwan Semi has insane margins. They're raising prices on their nanometer chips. They have the #1 market share as well. Let's see here. Yeah, market share 71%, up from 62. But this is in USD as well. We've converted it from Taiwan currency. They made $14 billion of after-tax net income this quarter. After they paid $2.5 billion of taxes. Like, they're making 10 to 15 billion net income a quarter. These growth rates are insane. It's like specifically this past year after they did the price increases, the net income growth has been nuts. And you get a 1% dividend, and they do massive share buybacks, and they trade at a low multiple, 30 PE. What's the forward PE? A 25 forward PE. for a quality company as this name. If I own this stock, I would not trim it. I wouldn't sell it. I would just hold on to my shares and diamond hand it. Yeah, Sean, I love that name. Hey, thanks, AJ. Yeah. Um, DoorDash partnered with Waymo. Did they really? That's actually pretty interesting. Which, Waymo is owned by Google. That's like the autonomous car people. DoorDash, I mean, is still really expensive. 70 forward PE on DoorDash, but they just got profitable. Here's what's so cool about DoorDash. Look at this. They're still printing. They're right now making a couple hundred million of net income a quarter. But even though they're doing all this, and it's expected to grow a big chunk more, they're still trading at 70 times next year's net income. But another cool thing about DoorDash, and this happened recently, they partnered with McDonald's, where if you go on the McDonald's app, you can order, you can basically get food to your house delivered to you without ever having to go through the door. You never have to get DoorDash or get that app or anything. They like private. It's really cool how network or how McDonald's partnered with them, where you can order it on the McDonald's app. It all is through DoorDash, but it never tells you it is. And it makes it easy for McDonald's people. I'm a McDonald's shareholder too. That's why I know about that. Because the day they announced that news, it was a pretty big deal. Oh, dude, what I love about McDonald's, check this out. We get a dividend as well. We got a $31 pending dividend from McDonald's. A lot of people don't know McDonald's is really a recession proof, I call it, recession resilient real estate royalty play. In 2008, the stock didn't dip. It was one of the second best performing name behind Walmart. In a recession, even in a recession, their tenants still pay rent back to the parent company and royalties. They own 80% of the land under every McDonald's, so every franchise pays above average rent back to the parent company, and also they collect royalties. If you go spend $100 at any McDonald's, $4 of that transaction goes back to this corporation as a royalty, a sales and marketing royalty. Because think about it, these franchises don't have to do any advertising. The corporation is the one that pays for all the commercials and stuff and does all the advertising. So the franchises benefit, so they pay them the royalty. It's a really cool, like, they have nailed down how this company works. And this isn't a restaurant company. They have like 35% net margins. There's no restaurant in history that has that kind of net margins. That's because they're not a restaurant. Would you buy Taiwan at these prices? I honestly, if I had the intention to never sell Taiwan Semiconductor, I probably would nibble on them. Wouldn't full size position it today, but I'd start the dollar cost average. I don't mind buying some stocks at all time highs, and that's one I wouldn't either. Let's see here. ALAB. Let's do that one. Hey, what up, Jace? Let's check it out. So Astera Labs, this one fell 8% on the day. I don't think they reported earnings. I think it's just momentum. It might be from that Google TPU deal or I don't know. The NVIDIA AWS deal, I have no clue. If I was a shareholder, I certainly would not be selling out, but the value to buy in today was still hard because the forward PE is 100. So this is the kind of stock that certainly deserves a super high multiple because everything here is so impressive. They beat on every expectation every quarter. Check this out. Huge beat on revenue. That's the orange line with the analysts expect massive beat on revenue. Double beat on the net income or EPS. Beat by double on EPS and on EBITDA, like triple beat every quarter. The growth is insane. The sales are up 103%, after grew 206, and the net income is the most profitable they've ever been. And on top of that, a monster balance sheet, no debt. They have lots of they have over $1 billion of cash, earning them like 10 mil of interest a quarter. I really like Astera Labs. I sold Nebius, bro. Hey, what up, Bogdan? Hey, I don't I wouldn't call you crazy for doing that. I think there's better stocks to invest in, like a more better AI beneficiary. BITO. Okay, what up, Caden? Good to see you, man. Let's see. BITO. This is basically a Bitcoin covered call ETF. So if we pull up the price of Bitcoin next, oopsie. Oh, well, we should check out the trend prediction feature. It takes a bunch of charts and kind of predicts what it does next. That's not what I was looking for, though. We want to pull up IAU. There we go. So here is BITO versus Bitcoin. So this isn't, a lot of people think this is just a Bitcoin ETF. No, they actually sell calls on Bitcoin. So you're buying this ETF down here to maximize your dividend income. If we go to the dividend, it goes down every year by double digits, but you get an 80% dividend yield. What's the expense ratio? So a 1% expense ratio, a little steep. But yeah, it's basically a Bitcoin covered call ETF. Even with the dividend, it doesn't keep up with Bitcoin, but it's a good one to maximize your income. Let's VOO. Hey, this is just the S&P 500. This is my basically best ETF to buy if you just want to buy the S&P 500, my favorite ETF out there, like QQQM as well. And it breaks your money for you into the top 500 companies in the US. Pretty impressive. SoundHound AI. Okay, so if then we'll look at Coremetics after this. What up, 1.5? Yo, Coremetics, I just bought more of them. So here, wait, it was up 12% pre-market, then it kind of crashed. Really, Plasma? I didn't know it was up that much pre-market. Yeah, hey, we'll look at IRM after this too. We actually bought IRM today. We bought Iron Mountain shares today. But here's SoundHound AI right here. This is I've been on their website. An audio subscription company where it's crazy expensive. I wouldn't pay for it, but as we were looking, my mom was looking for something like this, but you give it a bunch of your voice's data. You give it a bunch of your voices, then it will just replicate your voice. And you just give it the text, and then it will say it for you, and it won't sound like AI. It still sounds like AI to me, but what they do, all that aside, here's why the stock is a little interesting, because look at their subscription revenue right here. Literally just 2 years ago it was a nothing burger, 400K a quarter, nothing. But recently, these year-over-year growth rates in the middle here are super good. Subscription revenue is all reoccurring. So as long as they keep up that growth, they're beating on expectations every quarter. They are losing a lot of net income though. They're losing 50 million net income a quarter. That's a lot, but as long as they keep up the top line growth, it's still interesting. I certainly would never have it as a meaningful big size position, but it's not the worst. This is another one I wouldn't have as a major size position, but I love this one. This is Coremetics. I actually was buying the dip on them in my Roth. Actually, let me pull that up. If we go over here to our Roth IRA, we own 78 shares of Coremetics. We're down 12% on them, but I wouldn't make it a big size position. Remind me to get to Iron Mountain. We bought Iron Mountain in our Webull account today. Basically, there was a short report coming out about Iron Mountain, and it sent the stock down. On top of just the whole data center REITs falling right on top of that momentum. But anyway, if I was a shareholder of Iron Mountain, I wouldn't sell. Anyway, here's Coremetics right here. There's a big short report on this one. Let's see this one too. 22% of all the shares on Coremetics are being shorted. So check this out. I normally don't recommend these kind of companies, but I think it's worth just the smallest amount of money in my portfolio. Like I put $700, but the whole company's worth $760 million. Super small market cap. The whole company's worth $760 million. But here's what's so cool about them. They have no debt at all, and they're printing money. Let's check. Oh, please come on. Yeah, they're making easily 20 to 50 mil a quarter. It's mainly from their DefenCath prescription, which is massive growth right here. That's the main reason I'm buying the stock, for the DefenCath growth. But most of their sales come from one hospital group. Hey, actually, good thing we were about to end the stream anyway. I just got a notification. Your live is no longer eligible for recommendation. It is restricted because the stream primarily directs people off the platform. Well, there we go. So if you're on the TikTok stream, the viewers will slowly spiral to zero. By the way, if you want to support me, best way is just hit the follow button. We stream every single day. I sell nothing. I have no course, book, anything like that. The best way to support me, and this is probably why I'm getting taken off, but if you want to support me, best way to, because I keep getting banned on TikTok, subscribe to my YouTube channel. It's called Nathan Roberts, also in the link tree in my bio. But I'm also streaming on there, so you can rewind it, replay if you need. But yeah. All right. AppLovin, let's do. Or I probably missed a stock there too. We'll look at it. I gotta go. We've been streaming for 2 hours now. Wow. But we'll look at a few more here. Then I gotta go. But we stream every single day. Again, I sell nothing, no course book, nothing like that. And so here's AppLovin, one of my favorite names out there. This stock deserves all the hype around them because of they have the most incredible financials I've ever seen. They are being investigated by the SEC right now. Their ads are so good and so profitable that they're being investigated by the SEC. So I almost can't believe it, but it's real. Check this out. I've never seen a company with this impressive numbers. So if we go to the revenue, it's 1.4 billion, up 68%. So they did 1.4 billion in revenue. Out of that 1.4 billion, 840 million of that was their after-tax net income. That's after they paid 170 million of taxes. They kept 835. So that means their net margin was a 60%. That's a higher net margin than NVIDIA has. Their margin expansion is crazy. Same with the free cash flow. Free cash flow, new record every year, every quarter. I made $1 billion of free cash flow this quarter, 900 million net income. Like the margins are nuts, and this is a stock I regret not buying. They deserve all the hype around them. Great name. What's the app called? Yeah, if you want to get this app, it's in the link tree in my bio, very first link there. It's a brokerage called Moomoo. Yeah, you can just type it into Google, broker called Moomoo. It's also in the link tree in my bio, very first link there. It's also an affiliate link too, so if you're going to like deposit $100, we'll both get like some free stocks there. What about VWAV? What's that one? Wait, hope I can find that one. I've never heard of that. VWAV? What's up, TKH? InnoData, InnoData's having a great day, right? That stock doesn't want to load there. Maybe we're not going to be able to find it. But yeah, InnoData, this is your data labeling company. They're still really overvalued. I mean, we're up 78% on them. So we got them at a better valuation, but its current valuation is still too tough to pay, I think. But it's a stock that I'm legit diamond handing and never selling at this point. Yeah, I really like them. So here, I don't know if we'll have time for them. I really like InnoData. I've made so many YouTube videos about them. Ahmed, we already looked at them a few times, but you know what? Maybe we'll look at them again at the last stock, if you give me a minute. So here's Vision Wave Holdings. Let's see, $140 million market cap. So a very small market cap. Looks like they just IPO'd in July. So yeah, we normally don't cover these kind of stocks, 100 mil market cap. So they have no revenue. So if we go to the revenue, it says no data because they've never sold anything, not a product or a service, and they're losing money. Yeah, we can't cover that one. I apologize. Just no fundamentals there. Hey, market said XYF stock. Let's check this one out. XYF. So this is X Financial. Ooh, we can look at HCA Healthcare. I've been here since you started. Hey, R Hunter, what up, dude? Good to see you. I know. I remember you were the first person. You're like beat Looney. Or here's X Financial. This is a $260 million company. Something just happened. They gapped down on earnings day. Let's go look at what their earnings were. So, this is a Chinese company. So we'll convert the currency from Chinese yuan to USD. Yeah, all the revenue does come from China. Let's see what so this is great news. They're easily making 70 or we'll call it 50 to 70 million of net income every quarter. And the growth rate is good. The sales are up 22, net income's up 10. I wonder why the stock's doing so bad. Wow, a 7.8% dividend yield. Maybe it's just because it's China, but there was some, I guess, bad news specifically on earnings day, or I don't know. I mean, it's China, so that might explain it. What up, Accelerate? IQST. I haven't heard of this one before. Another really, really small one. They're worth $17 million, and they're at an all-time low today, unfortunately. So they're a telecom company, a fintech. And so, let's see, revenue. Wow, is that real? They did $100 million of revenue. They're doing like 50 to 100 mil of revenue a quarter, but they're losing a couple mil a quarter. And at first glance, you're like, oh, they're only losing 2 mil a quarter. But I think when you're worth $17 million, losing $2 million is literally 10% of your entire company. So sadly, there's I think maybe real bankruptcy risk here. I don't know. I can kind of just understand why this one's at all-time low. Really small speculative name. I'd be careful with that one. So HCA Healthcare, this is one of my favorite names. I actually just bought them for the first time in my Roth IRA. Check this out. They are down on the day, but that's okay. I'd love to own more of this stock. This is one of the most high quality stocks I've ever analyzed. They are I've just made a YouTube video about this one too, but we'll keep it simple here. If you look at the revenue's up 9.5, but the net income is up by 28. So what does that mean? That means there's margin expansion. Net margin went up by 18, but notice the net income is up by 28, but the net income per share is up by 42. You're not going to believe this. Check this out right here. Here's my favorite. Oh, and they also pay a dividend. Remember, let me pull up that exact number. So if we go to net income, they made $1.9 billion in net income of after-tax net income. After they paid $800 million of taxes, they make $2 billion in net income a quarter. The dividend cost. Let's see. I'm on the wrong thing here. The dividend cost. Where is this? Oh my, there it is. The dividend only cost $166 million, dollars, and the cost of the dividend went down from 180 million because this is the best part, the share buybacks the company does. If we go to the total common shares outstanding, they've bought back 9.6% of the company in the past year. That's insane. They bought back 9.6% of the company after they bought back 5.4% of the company, after they bought back 4.9, after they bought back 10% of the company. No wonder this stock just doesn't go down. They buy back 10 to 5 to 10% of all the shares that exist every year. On top of paying, I like that the dividend isn't high yet. So super impressive numbers. They beat on every expectation this quarter. Check this out. If we head over to the orange line, which is what the analysts expected this quarter, massive beat on revenue, massive beat on EPS, which is net income, and a massive beat on EBITDA. So I'm not shocked to see this stock at all-time highs. Massive, just everything. That's the kind of stock that's just going to continue to hire. Yeah, hey, Chris, for you on the YouTube stream, yeah, if you want to get this app I'm on, it's actually in the link in the description. But if you're on the YouTube stream, this brokerage I'm on is in the link tree in my bio. It's actually a brokerage where you buy stocks on. It's an affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. It's a great brokerage, I think. It's free, costs nothing. UNH, actually, let's check that one out. At my friend's job, he gets a 15% discount on HCA. He's a nurse. Hey, that's pretty cool. Yeah, they're a hospital group. So here's United Healthcare. This one, they're struggling because of the future expectations. Because if we go to the revenue this quarter, and this is with all the Medicare, Medicaid providers, the sales are up. The revenue's up 12%, but the net income fell by 59%. And that's not some one-time adjustment either. Like the profits really have tanked this quarter because they can no longer basically overbill the federal government. They're going to have way less margins now in the future because well, let's see though. Like the EPS is supposed to fall to $1.70 next quarter, which is like, but it's supposed to rise then back to 618. We're a customer, we use the OptumRx. I'm kind of just staying away from this one. I'd rather, what's the forward PE though? So look, the current PE is a 17, but the forward PE is a 21, which isn't expensive. You also get a nice yield, 2.66% dividend. I don't know about that one. I wouldn't have it as a major size position. But Warren Buffett just bought the company though. Warren Buffett and Berkshire Hathaway just bought the dip a little on that one. So yeah, no problem there, Chris. Yeah, hey, Iris Energy, I don't love this one, but here's Iris Energy though. Yeah. When you think of CoreWeave, Iris Energy, Nebius, they're all the same company pretty much. They all just are companies that own a bunch of data centers and a bunch of GPUs. And I think Iris Energy, still most of the revenue comes from Bitcoin mining. But yeah, check this out. They're converting from a Bitcoin mining company to a company that's cloud hosting. Check this out. Their most recent news is Iris secures a $9.7 billion AI cloud contract with Microsoft. Some of the Microsoft cloud is going to be on their servers. They used to have it broken down. Like basically out of their revenue this quarter, I think it was like 240 mil. Let's see if out of this 240 mil of revenue, I think like 200 million of it was Bitcoin mining. But check out the growth though. This is nuts. I mean, that is insane. Triple digit growth for the past 4 quarters, triple digit revenue growth. The net income did go negative this quarter, but they're losing like the least, good, expectations are good too. Let's see. Is there any AI breakdown of the earnings here? No. I don't know. I don't really know. I'd be careful. They're not supposed to make any money for the next year. I just don't love that. I don't know how I feel about all the data centers stocks right now. Xpeng, all right, last one here. Xpeng. This is like a Chinese car manufacturer. They actually don't lose that much money, and that's the best part about this company. If you go to the net income down here, if you look at Lucid, you look at Rivian, you look at any of the like EV trash stocks, they burn through so much net income. But this one, they've significantly narrowed the losses. They barely lose 50 mil this quarter, 60 mil. And the sales growth has been really good. 100% revenue growth. It's a very low margin industry, these electric vehicles, but it'd be great news if they can get profitable. It's like it's like a Chinese Tesla. 100% of the revenue comes from China. Vehicle deliveries are up 75% year over year for their monthly active deliveries. Wow. Not too shabby there. Um, Vehicle sales increased 150%, fueled by strong demand for the P7 sedan and international market expansion. Gross margin improved by 20%. Yeah, that was those net income not loss narrowings was real good. PayPal, hey, PayPal, this is PayPal has not done well. PayPal stock is the same price that it was back in 2017. And since the stock has done so terrible, they've been buying back their stock like crazy. They're making a billion plus in net income a quarter. And well, actually, PayPal just started paying a dividend. So but what are they doing with basically a billion plus of net income a quarter? Well, if we go over here to the stock buybacks, they legit spend $1 billion plus a quarter buying back their own stock every quarter. And so in the past year, they've bought back, I think, like 7% of the company. Here's how you tell. If you go to the net income grew by 23, but the EPS grew by 31. Again, the net income growth rate and the EPS growth rate should literally always be the exact same. The only thing that changes it is the share part of the ratio. If they diluted you or if they bought back their own stock, that's what changes it. So, like if they diluted you, the net income, you'll sometimes see the net income grew by 23, but the EPS only grew by 15 if they diluted you or something. But so whenever they buy back their own stock, it makes the EPS go up higher, which makes the PE ratio go down. It gives you more ownership in the company, it makes the dividend cost less, and in short, just makes the stock go up. So I almost wish they did an acquisition. Yeah, that stock we were just looking at was PayPal. They've been doing massive share buybacks, but they might they might sadly be fairly valued around a 13 PE, and they've actually done so much share buybacks that the price to net income is actually like a 14, 15, but they've bought back so much of the shares that the PE ratio is way lower. But anyway, we want to see the growth come back. Let's see, like the revenue is single digits, 7. This was good this quarter. 7% growth is good this quarter, but 5, 1%, 4, 5, like barely beats inflation. Interesting. All right. I hope you guys have a great rest of your day. I do got to go. Let me end this with a quick portfolio update. And if you do want to support me, very best way to support me is just subscribe to my YouTube channel. I'm trying to build up my viewers on there. It's called Nathan Roberts, also in the link tree in my bio. But yeah, just type into YouTube Nathan Roberts. So here's our portfolio. This is known as our dividend only account right here. This is where every stock in here pays a dividend. Every stock in here is also in the S&P 500. And here's our total percent change on every stock. Only stock we're down on is Carlisle right now. We actually just bought a little more fractional more than, but yeah, year to date, we're up 15%, way better than April when we were down 15%. We also have a Roth IRA. Innodata is having a great day, but our newest position is Cavco. Oh, literally, hey, best way to support me. Literally, as soon as the stream ends, the second the stream ends in about 2 minutes when I end it, I'm uploading a YouTube video solely doing a whole analysis on Cavco. So please go leave a comment, say, hey, I came from the stream. My videos don't get many views, like 200. But if you want to check that out, I analyze it on my phone. I deep dive into it just the same way I do on the streams here. And also, here's our Webull portfolio. This is kind of like our risk on account. We're only up 14% all time. That's why you don't listen to me. I'm not an expert. I sell nothing. I have no course book. What's up? I literally sell nothing. What is a good buy right now? You think, hey, Joy, thanks again for that gift there. Actually, literally today, I bought 4 shares of Iron Mountain and 5 shares of Calmain, and I'm already down 1% on my shares, so that's great. But these 2 stocks I'm going to be holding on for the long run. But yeah, that's our Webull portfolio. And finally, we have our Moomoo account, where once we buy a stock in here, we try and never sell it. We never sell it. It's called our buy and never sell portfolio, where I'm not allowed to trim a stock. If I'm trimming my position, I'm not allowed to. I have to fully sell out of it. So these same holdings I've had for so long. So yeah, these are all the holdings in here. So anyway, hope you have a great rest of your day. I'll be uploading the video right now. So hey, best way to support me, go watch the YouTube video I'm uploading right now on my YouTube channel. Again, it's called Nathan Robert. It's also in the link tree in my bio, but just type into YouTube Nathan Robert. Thanks again. And thank you to everyone on the YouTube stream. Y'all are the best. Thank you very, very much. Please hit the like button if you have